right, what is up, everybody? Divine Hood here, coming at you with another daily update on Bitcoin and the crypto markets. Welcome in, everybody. Welcome in, Tiamat. Welcome in, Andrew Kajus, Quiles, uh, Muslins, MCD, Sickness Shoes, JW, John, Anonymous. Welcome in, everybody. How is it going? We are seeing a bit of volatility in the crypto markets. Yes, this was a catalyst from the news, but when we saw this dump, which for me really happened very early in the morning and kind of overnight, this I had to go into my macro TA and check to see if we had any major resistance targets at this area. And what I will show you guys is a bit concerning here. And we will go into in depth of the different scenarios that could happen for Bitcoin. Is this a bigger topping moment before we get a much bigger drop to the downside? Or is the bullish market structure overall going to stay intact? And are we going to bounce to new all-time highs? So welcome in, everybody. Let me know, can you hear me okay? Can you see the screen okay? And thank you for joining. We will cover some of the altcoins today as well. We will cover just total market cap, Bitcoin dominance. We're going to go over a lot here. Very important stream today. Very important market updates to be looking at here. And this really is quite a decision point for Bitcoin. This week's close is going to be pretty important. Now, guys, I hate to do this to you, and I swear this happens every single time I go on vacation, but I am leaving on the weekend to go on vacation. And so I will try to keep you guys updated as much as possible. I know I mentioned to you guys earlier this week on Friday of last week and Monday of this week that I am going to be going on vacation over the next couple weeks, but I will still try to put out updates as quick as possible and as much as possible. Also, I will be posting updates in the Telegram group. If you guys are part of that Telegram group, you guys can join that Telegram group to see updates from me while I am gone. If you are interested in the Telegram group is free. You just need to sign up with BYDFI using my affiliate link. You need to deposit at least $100 in the account. First off, you'll get 17% discounts on trading fees. You'll get a 50% deposit bonus on your $100 deposit. And then once you've signed up with BYDFI, you can go click the link in the description to join the Telegram group. Once you're in the Telegram group, all you need to do is type in /verify and then your user ID number, which is this number right up here, and it will get you into that Telegram group. So if you guys are interested in knowing some of my updates while I'm gone, that is a way to kind of get more updates rather than videos. Okay, guys, welcome in. And, you know, Bitcoin is seeing a bit of a volatile crash here. Looks like a pretty impulsive crash here based off of the catalyst of this very bearish PPI numbers. You know, PPI coming in a lot higher than expected. And actually on an annualized rate, PPI is expected to be a 10.8% inflation rate for annualized. Now, yes, 0.9 for the month, but 10.8 annualized is no joke, and it was much higher than expected. We know PPI is producer price inflation, and we do know the producers always pass the cost on to the consumers. And so this could be a very bearish catalyst that causes the Fed to not cut rates as quick or as deeply as they were expecting to. And it could just cause more uncertainty in markets, which what do markets hate the most? Markets hate uncertainty. They would rather have knowingly bearish news rather than uncertainty in markets. So these uncertain times cause massive fluctuations in price, in volatility, and we are just going to go through what is happening here. So let's go ahead and go into the charts. Bitcoin did break out to new all-time highs yesterday. In my video update yesterday, I really emphasized that it was key to maintain above the value area high of our range breakout. This has been our range for about the last 5 weeks, 4.5, 5 weeks here. And we saw Bitcoin breaking out of this, seeing a nice 5-wave impulse to the upside, 1, 2, 3, 4, 5, breaking up, hitting resistance, and now we're breaking back into the range and actually attempting to lose some very key levels of support. So first off, where did we end? Why did we end here? Because in yesterday's video, I covered a couple price discovery targets for Bitcoin, and I covered if we go onto the Coinbase chart and we look at our most recent pitchfork, our next pitchfork resistance is about 129K, the upper band of the pitchfork, which we did reject from last time we came up into that upper band. We rejected on our previous all-time high, and then we had the bearish backtest, forming some bearish price action for a bit. That is a level that I highlighted in yesterday's video. But if we go onto our weekly wave 3 pitchfork, we are still fighting with this overall upper band here. And the last time we came up into this upper band, it did reject us, and it did give us a multi-$1,000 correction to the downside, over a $10,000 correction to the downside. Last time, this range in the all-time high range back in May, actually November through February, we were holding it as support. But once we lost it, it's been acting as resistance ever since. And if we do see another failed rejection from this pitchfork band, could we expect another much bigger drop all the way back down to the midline again? Generally, with these more macro pitchforks, yes, you will bounce around in between these levels, seeing massive bounces and ebbs and flows, but we do tend to work our way. A good example of that is last time we were rejected from that band, we chopped around, overall coming back down to backtest that midline, and once we got the backtest, then we saw our new all-time high come in. So the targets that I laid out in yesterday's video, we had the $126,000 target, really $126,000 to $127,000 top of the pitchfork band of the bigger wave 3 cycle pitchfork. And then, of course, the most recent pitchfork, 129K. And then we covered some targets even above that. But where did we top out? So if I go onto my Binance chart, and this is where we have our macro time frame analysis, and we zoom out and we look at this 2-day time frame here, and we look at this pitchfork here. This is our multi-cycle pitchfork pulled from the last key highs and lows of the last cycle. And you can see just how well this pitchfork has been respected. Every major swing pivot has really been respected all the way. We are now starting to see a failed auction, another failed auction breakout above the pitchfork midline. And if we do see that failed auction that happened a couple months ago, back in early July, we dropped below it. We came above it just to grab the liquidity, and we're seeing sort of a failed auction type failed auction, I guess you could say, of that area of the break above this pitchfork midline. And if we do close this weekly candle underneath this pitchfork midline, we could see a much bigger correction come in play here. But where did we top out exactly? So let's go ahead and look at another key structure that has guided us this entire bull market. Now, I have had this channel, this fib channel, on my charts for over 2 years now. So if we turn on this fib channel and we zoom out here, let's go ahead and zoom out. And this fib channel was pulled from the very start of the bull market, way back down in here. You can see we bottomed out in the bull market. We finally broke market structure. Let me actually zoom out onto, let's do the 3-day time frame so you guys can get a better look at this. So we finally broke market structure bullishly on the daily time frame, on the 3-day time frame, breaking above these highs, showing a bullish break in market structure. And this was really, really a key high that we needed to flip to support. So you see, we got our market structure break, breaking above it, came up to the top of the channel, came back down, back tested that key high, flipped it to support, continued to test it multiple times, flipped it to support. We worked our way all the way up to the top of the channel, which was also our golden pocket of the entire bear market. So if we pull a golden pocket from the all-time high down to our lows, we turn on that golden pocket. You can see that golden pocket was coming in right in that area, which, here's the thing, guys. So this channel is a very, very important channel, pulled from the very key starting pivots of the bull market. Now, I'm going to turn off the Fibonacci channel, which shows you the fib channel extinctions, and we're just going to turn on the main parallel channel. Actually, let's see right here. Not that guy. Okay, maybe I do not have it on the chart. We will just pull that real quick then. Let's come in here. So from the bear market lows to our higher low on there, up to our first major high. And you can see this channel was a high time frame, well respected channel that we were trading in for about a year, really coming up to the breakout of the CME. The CME, or the spot listing of the spot ETF, was listed right about here, approved. That gave us our pump up to the top of the channel. So that CME from BlackRock in particular gave us this big giant catalyst to push us up to new all-time highs at 74K in 2024. Now, this was the main channel, and we were watching this channel through, really, as soon as this pivot was formed, that channel was formed, and we have been watching this channel throughout the entire bull market. Now, this is the main structure of the channel. This is called the base channel. And if we go ahead and take this base channel, I'm just going to hide this channel now, and we're going to turn on, actually, before I do that, I'll explain. So when you break out of that channel, the base channel, you can turn on your extinction targets, and it will give you extinctions for the new highs based on the trend. This is our overall macro trend at the start of the bull market. It's going to give us really what we want to maintain above if we want to maintain more macro trend for the bull cycle. So we're going to go ahead now, and we are going to take this main channel. We're going to just take that off, and we're going to turn on our fib extinctions for that channel. Same pivots, different extinction. We're just turning on the extinctions. And you can see here, first of all, after bouncing from the bottom of the channel, we worked our way up through the midline. We had that little multi-week ascending channel structure in here, and we were able to break above that, breaking to the top of the channel, which was also in confluence with our golden pocket of the entire bear market, our golden pocket retrace. We did get that $10,000 dump to the downside to backtest the midline. That's this white line here of the channel. Once we backtested that midline, held that midline, we pushed up, breaking out of the channel and breaking up to new all-time highs for 2024. Where did we break to? We broke to our key 1.618 channel extinction target, found an all-time high, corrected for most of 2024, pretty much back to the midline of the channel. Yes, we did see a couple deviations down below that midline. And once that midline overall held, we were able to make a run, breaking out of the top of the channel again, forming that all-time high range November through February up in this area, even back tested it, tried to maintain above, tried to hold it as support to come up to that 1.618 again. We failed, and we are dropping back into the channel. So once we drop back into the channel, you can see what happens. Drop back into the channel, bounce from your 618 golden pocket, back test bearishly that channel, and now this is confirming re-entry back into the channel. We reject on the bearish back test. Come down to the midline, bounce from the midline, another bounce from the midline, a little bit of a deviation below it, hitting into some crucial support levels, and pushed up from that 74K low, which was a very key low on the charts, pushed up to the top of the channel again. And we tried to break out in May, tried to break the highs of our main base structure channel. We could not break those highs. If you go in on lower time frames, there was a failed auction right up in this area. We had a failed auction. We could not hold it. We saw that three-wave corrective move down, hitting into our key pitchfork midline of that channel. Here, wait, let's zoom in here. It was this channel here, hitting into our key pitchfork midline, seeing that three-wave corrective move, hitting into our key pitchfork midline, and then we pushed up again. So hitting into that key pitchfork midline, bouncing, and now we are attempting to break out of our channel structure again. Let's go ahead and clean these brushes up real quick. All right, and so let's zoom in now onto the daily time frame. And you can see here, we tried to get above the channel for the past month, past 5 weeks, really, trying to break out of that area, could not break out of that area. We saw a bit of a dump last weekend, dumping down, making some new local lows. And after making new local lows, we see one last impulse to try to get back up, an impulse breakout, not only to new all-time highs, but break out and break above our main channel structure, which is our resistance in this trend for the entire bull market. And we rejected that area. We are seeing a very harsh rejection from that channel, and we are starting to break market structure bearishly on some medium-term time frames here, breaking our market structure even below our range lows here. Market structure break here. Now, it is just a wick so far on the daily time frame, on the 4-hour time frame, just a wick right now. But even this break in market structure, because we've had a bearish break in market structure, as a trader, one of the things that we need to be aware of is that this could have been a major rejection from a major high time frame resistance, where now we can expect a lower high to come in on the charts before seeing another lower low, or possibly even a bigger impulse to the downside. So very, very concerning here. If you are a bull, this rejection from this area, now afterwards, after yesterday's video, after we rejected, I came in and I looked at some of our high time frame TA, and to see a rejection, another rejection, by the way, a third rejection this year, rejection here, failed auction, rejection here, a little bit of a failed auction, a range that formed, we couldn't get it. Now coming up again, rejecting a third time here. If this is going to be some sort of distribution pattern, we see that tap one, tap two, tap three, and then the ascending structure, which we are seeing, and we start to lose key market structure, really coming down below these lows at 112K, we could see a much bigger drop to the downside that brings us really to much lower targets. Could be a multi-week correction to the downside. I'm not saying it's the end of the bull market, but rejecting from this high time frame resistance like this is not a good sign. Coming back into our range that we broke out of, our 5-week range that we broke out of, this range here is not a good sign. And at the very least, we could come test the lows of the range to test that undervalued price of the last 5 weeks of Bitcoin. And we really want to see us at least maintain within this range. Now, from our lows at 112K, it does look like we do have a pretty clean 5-wave impulse to the upside. After your 5-wave impulse completes, you're looking for a 3-wave corrective move. And that 3-wave corrective move most often of the time ends up coming in right around your golden pocket. Well, if you look here at our golden pocket, do we have confluence with our golden pocket? If this is just going to be a smaller correction to the downside and we are going to bounce from that golden pocket, the value area low of our range is coming in right around that golden pocket. Let's go on the Coinbase chart because I already have the TA pulled up, but you can see this is our most recent pitchfork. Another thing that is concerning, another breakout above this pitchfork midline. We failed that breakout. We're falling back down below that breakout. But coming down to this key level of support just below us, about 116.5 to 116.2. This area is a massive confluence of support. It is the lower band of our pitchfork, which you can see the last time we hit into that lower band of the pitchfork, we got very bullish reactions from that. It is our golden pocket of this entire impulse up. It's the golden pocket retrace. It's the value area low of our range, and we do have a daily level coming in right around 116.5 as well. A lot of confluence for support to look for a bounce from this area. Now, if we are going to see a bigger dump to the downside, a bigger corrective dump to the downside, or possibly even a big impulse to the downside, and we're looking at all of this as either an A wave or a wave one, we should expect some sort of reaction at this area, being the value area low of the range. After seeing a failed breakout of the value area high, if you fall back inside the range, of course, you're going to fall to the point of control. If point of control doesn't hold, you're going to fall down to value area low. Now, if we do see a bounce from here, I will be looking for long positions, and I will hold a portion of that long position to take to all-time highs in the bullish case scenario. But in a bearish case scenario, we see a bounce from this 116.3K area of support only to come up to our golden pocket area of golden pocket 786. That would be the two areas between the golden pocket 786 to see a lower high before now coming down and forming that bigger zigzag correction to the downside in a either this would be an ABC or some sort of complex WXY correction, or in the very bearish case, a 5-wave impulse to the downside, seeing that much, much bigger correction. So I am concerned about that. And the way that we are crashing today with this amount of volume, yes, this was because there was a lot of open interest in the markets, a lot of people longing the breakout of the all-time high. And we are seeing a lot of liquidations now. I mean, a lot. You know, in the last 24 hours, we have had over $1 billion in liquidations, really $822 million liquidated in the crypto market. Actually, surprisingly, more ETH liquidations rather than Bitcoin, but a lot of money has been wiped out of the crypto market in just 24 hours. We have seen a lot of destruction. So we do need to be aware of the bearish case scenario. As traders, we do not keep, as the data changes, we change our bias. And now with this bearish break in market structure, we do need to have the bearish scenario in mind that we could be making a lower high before continuing to make another lower low on the charts. Key areas of support for me. So this 116.3K area is going to be a key area of local support down below us. But in a bullish scenario, in a hyper bullish scenario, let me go ahead and hide this range for a second. We have our previous all-time high back from mid-July here at the midway of July. We formed a range for about 5 weeks. You can see that our anchored VWAP, which is our volume weighted average price, it's the average price over the last 5 weeks based off volume. And we do know that volume levels are the most important levels in the market. Volume and liquidity is what runs markets. You can see that our anchored VWAP from our previous all-time high is really where we're bouncing from right now. And it's also the point of control of the range. So if Bitcoin wants to maintain strength, true strength, and continue to push up to new all-time highs, we really want to maintain above this anchored VWAP, showing that Bitcoin is maintaining strength above the average price of our prior all-time high. We are seeing a nice bounce right now from this area, but we could still need to expect a potential 3-wave correction coming in. And in a smaller correction, we could bounce from where we're at now, come up really high, and then see it end at 116.3. That would be really nice to see. And then we push up to new all-time highs again. But in a larger bearish scenario, we would see a bigger 3-wave correction or potentially even an impulse down to our more macro areas of support. So one of the macro areas of support that I'm going to be looking at, yes, we do have 116.3K. And then we also have our anchored VWAP that is coming in from the 74K lows. Let me zoom out here onto the daily time frame. From our 74K lows, you can see that this anchored VWAP has been rising nicely and actually hasn't even been tested yet. Since we have broken market structure bullishly and can see this impulse up to new all-time highs, we have not come back down to test this anchored VWAP, which is going to be really our key to maintain more macro bullish trends. We want to maintain above this anchored VWAP, which right now is coming in around 104K. But by the time we work our way down, unless it's going to be a very volatile crash, but say we see some bounces in through here, some chop sideways and some bounces from these areas, the macro support level that we really, really do not want to lose is coming in at $108,000. What is that level? Well, that is going to be our macro value area high of our entire price action, our entire range through the entire year of 2025. Because when we see this value area high was acting as resistance for months, trying to break out of it, we did see some pretty big corrections down, but we finally broke out of that value area high, and now we are maintaining strength above the value area high. We are maintaining price action above. If we do fall back underneath that value area high, we can see this as a bigger daily or weekly failed auction breakout of the entire 2025's fair value of Bitcoin, and we could see a much bigger drop and a much bigger fill to fill all the way back down. Now, let's go ahead and zoom out here and talk about the macro time frame, because this has been one of the most bearish scenarios on my chart, and even still, it's overall bullish for Bitcoin over the years. But as far as the weekly time frame, let's zoom out to the weekly time frame. On the weekly time frame, from the very start of the bull market, we have been looking at our 5-wave Elliott impulse to the upside: a wave 1, a wave 2, our wave 3, our wave 4, our wave 5, finishing our 5-wave impulsive structure on the weekly time frame. After finishing that 5-wave weekly structure, we did see a multi-month drop to the downside, breaking market structure bearishly locally, and seeing a overall higher low come in. But after any impulsive formation finishes, let's just grab our impulsive. After any sort of impulsive structure finishes, you're looking for a corrective move. You're looking for whether it's a simple correction and an ABC correction, or you're looking for a more complex correction. You're looking for some sort of correction after an impulse finishes. Well, this weekly impulse that was a very clear 5-wave structure on the weekly time frame finished, and we saw a clear finish because of break of structure on the daily, on the weekly time frames. We broke structure bearishly, showing that that impulse was finished. Now we're looking for a bit of a corrective move. Let me actually come in on a chart that is fresher. Let's just get rid of some of this. All right. So after seeing that 5-wave impulse, we're looking for a 3-wave corrective move. Let's go ahead and throw this on real quick. This was the end of A. This was a flat correction in here. Took out the highs in a B flat, took out the lows in the C wave, came up for our wave 3, made new all-time highs. Your 3rd wave is usually your largest, most explosive volume-filled wave to the upside. Came down in a wave B, complex correction, and our wave 5 here. finishing your 5-wave impulse to the downside. We saw our distribution right where we wanted to see this. We distributed down, came down to our low 70s, backtesting our prior highs. Very, very key. What used to be resistance is now being flipped to support. That was a horrible line, but you guys get the idea. Flip to support, bounce here. But in a bearish scenario, we could be looking for a flat correction, just like we saw in here, where you push down for your first time, you come above the highs, breaking above the highs, and then you break all the way back down to take out the lows of that correction. It's a B flat correction. And in the most bearish scenario, we could be seeing that sort of move where we see a failed auction breakout above the all-time highs, really specifically above these all-time highs. See that failed auction, we roll over, and if we start to fall back within our macro 2025 range below 108K, we could see this bigger impulse down in a C wave to come take out our 74K lows, seeing that bigger flat correction before more continuation in the bull market. Now, this is something that I highlighted all the way back in November and December when we were seeing that distribution pattern form. We were looking for a potential flat correction that could last 6 to 9 months, and then we could continue the bull market in another impulse to the upside. So we do need to be aware, and I hate to be the bearish guy here, and I'm not really bearish yet. We have not confirmed breaking down below, breaking key daily market structure yet, but we do need to be aware of the more bearish scenario where a flat correction does come in this area, and we could fall down, taking out the lows of 74K. Right now, the only reason that I am having this as a possibility on the charts, well, first of all, structurally, it is still a possibility, but if we look at our weekly time frame, from our 2024 highs, 74K highs to 112K highs, up to our now 123K highs, on the weekly time frame, we have 3 higher highs in an ascending, rising wedge type of structure, which we do know is a ending structure out of the impulse. Once you start to see the impulse lose some steam, you get this ending diagonal or a rising wedge, whatever you want to call that. And if this rising wedge breaks down, then you are expecting to come take out those lows. So as we are seeing this rising wedge form, this exhaustion in the weekly time frame form, on our weekly momentum oscillator, you can see higher, low, higher. You have your high, you have your lower high, you have your lower high here. We have a triple drive of bear div on the weekly confirmed. Now this green dot really is throwing a wrench in that, and we'll see if the green dot does close with the green dot this week. But we are seeing a triple drive of bearish div on the weekly. But more importantly, our money flow now is seeing a bearish divergence here on the weekly time frame. And even if we go back to last cycle, we are seeing multiple weekly divergences with money flow and momentum from our last cycle here. And so this is a high time frame warning signal that we do need to pay attention to, that the bull market could be potentially close to ending, or we could be seeing a multi-month correction come in here where we could see a bigger drop to the downside. I'm not saying this is the bear market, guys. I am not saying that at all. I'm saying we need to be aware of a bigger correction. And honestly, in the most bullish scenario, after seeing a multi-100% pump to the upside in a 5-wave impulse, to get a flat correction here would probably be the most bullish thing you could expect, and then more upside. After normally in a sharp correction, in like a sharp zigzag correction, you're actually looking for a zigzag correction down to the golden pocket. And that would be pulling from the golden pocket from the lows of the impulse to the highs of the impulse, which I didn't get that right on. But in this general area, we would be looking to come down to 51K, which would be right below our wave 4 lows. And anytime you see a correction, oftentimes in that correction, you will come take out the lows of your 4th wave there. So that could be an area where we could expect a correction down to in a bear market, or you would even take this, you would put it on log scale, because that is more than 100% move to the uptime. And in worst case scenario, you would correct down to 32K. I am not saying we are going there, guys. Let me be very, very clear on that. I do not think Bitcoin is in a bear market yet. I do not think it's over. I do not think we're going there. I think in the bearish case scenario, we see a flat correction here where we do come down to the low 70s again. We test our range, our prior ranges, and then we continue the push to the upside. Now, that is only if this structure, this ending diagonal structure, is done here. We don't know that it's done here yet. Right now, as far as daily market flow, daily market structure goes, it is not confirmed as being over yet. But the first big warning sign that this could be over is yesterday's attempted breakout of the all-time high hitting into our key fib channel resistance and now seeing a bearish break in market structure locally. If you are a objective trader, you do need to keep this in mind as a bearish case scenario that we could be seeing a much bigger drop come in play. We also do have those high time frame bear divs, not only on the monthly time frame, but on the weekly time frame. Money flow is starting to roll over now on many time frames. So just something I want to give you guys a warning about. We do have most of our liquidity is down below us. Let me jump into the chat here. Say hi to everyone. Welcome in, guys. Jesus Save 77, welcome in, man. Thank you for coming. Hash 710, welcome in. Master Ghoul, thank you for the loud and clear. All right, thank you, Tiamat. False Prophet, what is up, guys? Guys, False Prophet is the creator of NAMI. NAMI is a momentum and money flow indicator that I use for entry and exit confirmations in trades. And since using this indicator, especially in confluence with Market Cipher B, I have really nailed down my entries and exits on trades, and it's been super, super helpful. I don't know if I could trade the way I do without it. And I highly recommend, first of all, no matter what, price action first, indicator second. Mark out your key levels, mark out your key areas of interest, let the market come to you. But once that market comes to your key levels, that is where these indicators can come in and shine, and they can help you get confirmation whether to enter the trade or to stay out of the trade, or whether to exit a trade when you're getting up to a resistance level. So just want to say NAMI trading, this indicator is called NAMI. False Prophet is the creator of NAMI trading, really good dude. And if you are interested in purchasing NAMI, False Prophet has given me a 50% off discount code if you use my affiliate link in the description, where you can get 50% off lifetime purchase of NAMI. It's much cheaper than Market Cipher B. And with the 50% off discount code, I believe now would be the time to get it if you are interested. So link is in the description. Discount code is in the description. Divine50 is the discount code. Just letting you guys know if you want to. If you do not trade with indicators, that's great. If you use a different indicator, that's great. But I'm saying for me, this indicator and Market Cipher B really helped me nail down my entries and exits. Carvella, what's up, man? Good to see you in here. JW, welcome in. Thank you for coming. You're looking for Tiamat. You're looking for a 3 drives pattern, another all-time high, and then a larger correction from here. You know what? That is not a bad idea. But are you looking? So if we look, we're on the 4-hour time frame, and we look at our prior all-time highs of this range. We did see sort of an SFP, a swing failure pattern liquidity grab, and now you're looking for one more push up to SFP, the SFP, giving us a third swing failure pattern, or second swing failure pattern, third liquidity grab, or third high, and then a bigger drop. That could be seen as a valid thing, and we could also be looking at that as a Model 1 distribution in this area. So in a Model 1 distribution, you have your initial high, your wave 2 is always higher than your wave 1, and then we would want to come down, but you would want to come down a little bit farther in distribution. You'd really want to come down to the lower part of this range. You'd want to see a bounce from that lower part to come up to make one more high, creating your tap 1, your tap 2, your tap 3, your Model 1 distribution, and then you see distribution play out to the downside, dropping much further. So that is a possibility that we could be looking at here. Really, locally, this next week, this weekly close that we're going to see is going to be very, very important, guys, because if we do close underneath, back inside our volume profile of this last 5 weeks, we could expect to move at the very least, down to the value area low of the range. Well, we do know the value area low is going to be an important local support level below us. We do have a daily time frame down there. We have a golden pocket. We have the value area low of the range. So yes, it is going to be important, and seeing a bounce from this area just to come up and grab the highs one more time is definitely a possibility. For me, I am going to be watching our macro fib channel. If we cannot close this weekly, like if this weekly candle closes, let's just zoom out onto the weekly candle, because this is a higher time frame resistance level, and we see another rejection from this channel here, it could get really bad, guys. We could drop back down to 108K very, very easily, and 108K would be our real test. Okay, Grotto EZ, is that, let's see here. Where does it show me the jets? Enjoy your holiday, brother. ENA plus Tau when you get a chance. Yeah, we will look at some altcoins. Also, can I see how you place the pitchfork? I tried auto auto one. First of all, the auto pitchforks will never give you as accurate readings as if you place it yourself. Use the magnet tool, place it yourself. I recommend you do that with channels. If you use regression channels, they are nowhere near as precise if you learn how to do them yourself. Same with the auto pitchforks. So yes, I will show you how to do that. How do you place a pitchfork? Very, very simple, but you do need to know the right pivots to choose. So for instance, let's go into our Coinbase chart. Our most recent pitchfork that we are watching right now is going to be this pitchfork here. So we look at our key swing highs and swing lows. Our 74K low was a key swing low. We broke market structure bullishly on the daily time frame, maintaining our bullish trend. We saw a top on our bullish trend. We got a bearish break. So that now we know this was our tap, our pivot 1, our pivot 2, and then wherever this corrective move ends is your pivot 3. You place that pitchfork in those 3 pivot levels. And then really you kind of have to know with pitchforks between modified skiff, and original, like because we know we're kind of in this ending diagonal, modified skiff. And I will let you guys know that Bitcoin does prefer modified skiff pitchforks. A majority of the time, the modified skiff pitchforks work better than the skiff pitchforks for Bitcoin. But you see that we chose it off of 3 very key pivot points, high, lows, highs to our higher low corrective moves. And then that can give you your major targets for this last leg up. Just like on our weekly impulse pitchfork here, we looked at zooming out onto our weekly time frame. We looked at our weekly 5-wave impulse, right? We have that 5-wave impulse, a wave 1, wave 2, wave 3, wave 4, wave 5. Now, inside your impulse, the wave 3 is often the longest, strongest, and most important push to the upside. Your wave 4 correction is very important, and then you can get your wave 5 impulse to the upside. Well, how do we find the targets of that wave 5 impulse? How do we find out where that wave 5 impulse can end? We take our pitchfork, we go from the lows of wave 3 or the lows of wave 2, lows of wave 3 to the highs of wave 3, and then we put it down to the lows of wave 4. I've had this pitchfork on my chart for over a year now. Really, once we made that pivot, this pitchfork was on my chart. Go watch my videos back in November at the very, very beginning of this channel. This pitchfork was a pitchfork I was showing when we were rejecting up here. I was showing that we had a high possibility of rejecting at the 108 all-time high based off of the pitchfork resistance. And you can see, where did our wave 5 target end up? At the top of the pitchfork. So these pitchforks can be very, very key high time frame resistance levels and support levels, by the way, that will give us our major pivot points within this channel. If we now zoom in on the daily time frame on this, you can see that even within this wave 3 pitchfork, let me go ahead and get this off the chart. Within this wave 3 pitchfork, it has given us every major pivot, rejected from the top, lost the midline, back tested the midline 3 times, came down to the lower band, bounced from the lower band, got above the midline. We didn't back test that midline, so we saw our 3-wave corrective move to back test that midline. Only once we back tested that midline, we came up and made new all-time highs into the upper band of the pitchfork. Now we're seeing a bit of a range in this upper band, trying to break above it, trying to break up to the top of the pitchfork, which is going to be around $145,000 by the time we get up there. And now we are seeing, a loss of that pitchfork band. And so are we going to come all the way back down to back test the midline again, which that midline by the time we get down there could be around 108K, where your macro value area high is. If we pull that range again, macro value area high could be around if we chop for a couple weeks here. So these pitchforks are very important. Now we will go in and look at some of those altcoins in just a second here. ETH, we'll check out ETH. Bitcoin is going down, is not going down anymore. You know what, Turd Ferguson? That's a great name, by the way, Turd Ferguson. I hope so, man. I am still long on a lot of some altcoins. I did get stopped out on some of my long positions, my alt long positions, but I am still long and strong, and I am hoping for more bullish price action. Just as a trader, we need to be aware of both scenarios. And if we do get new data on the charts that could suggest bearish price action, then we cannot ignore it because we have a bias that we want it to go higher. So that is all I'm saying here, guys. I'm not saying the bear market is in. I'm not saying we're going to see the big dump right now. I'm saying it's a greater possibility now that we have broken market structure bearishly. Yeah, I just showed David. I just showed how to do the pitchfork. The pitchfork tool is going to be in one of these guys here. Let's see, where's it? I've had it favorited for so long that I don't even know which one it's in yet anymore. It's probably in this guy right here. Where's it at? Not pitch fan, it's pitchfork. It's in one of these tabs here. And, I have it just right up here, pitchfork. So there you go. For the pitchfork, I would recommend turning off some of the levels. Look at the really important levels. So I have my upper band, my lower band. That's these light green and dark green levels. The midline, of course, and then the top and the bottom is the most important. Let's see here. Where was I? I don't know what I'm talking about. I guess, eyes for the wise. I guess I don't know what I'm talking about, but I seem to be profitable. So, to each his to own. You have the right to your opinion. So I'm not saying bear market, brands. I'm not saying bear market at all. I did not say that. I'm saying there's a possibility we could get a bigger correction coming in. And in worst case scenario, we would see a bigger 3-wave corrective move down. But I did say that's not likely to happen because of where we bounced here. And in worst case scenario, it's far more likely we get a flat correction here before coming higher on the higher time frames. Not a bear market, not a bigger crash down to 32K. I'm just saying that could have been the bear market targets if we had a traditional bear market. And I'm not saying that's starting now either. We got our all-time high yesterday. Greed is high. Yes, greed is high. Eyes for the wise. I did not say we're in a bear market now after 24 hours after the all-time high. All I said is breaking market structure bearishly and seeing a failed auction breakout of the all-time high is a concerning thing where we could see a bigger pullback. So you're twisting what I'm saying or just not listening well. Let's see. No, you just play the way the market takes you. Yeah, play the way the market takes you, man. If you do get new data that suggests that you could see some bearish price action, you have to keep that in mind as a trader. I don't know how long, eyes the wise, I don't know how long you've been trading, but as a trader, you should keep an open mind to both the bearish and the bullish scenarios. Yes, right now, market structure on higher time frames is bullish, and it is still bullish, but we do need to, now we are breaking some market structure on lower time frames bearishly. We do need to keep in mind that we could see a bigger correction coming here. A correction doesn't mean a bear market's in, man. A correction doesn't mean that it's all over and we're going down. I didn't actually even say that. I said if you were going to see a traditional ABC correction, you would look for a bigger correction, but likelihood is that we're going to see a flat correction in here if in worst case scenario, that's worst case scenario, and then go up more. But okay, so exactly, we needed a bigger correction. Yeah, and this so far, this is not even a really big, Dwazi, this is not even really a big correction yet. So very, very small failed breakout of the all-time highs, which the last time, by the way, guys, the last time we saw a failed breakout of the all-time highs here in May, we got a multi-$1,000 correction to the downside. This is a perfect example of what could happen now. We had our all-time highs up here. We tried to break out. The very next day, we saw a bearish engulfing candle, and we got a 3-wave correction that lasted a month or so, down over $10,000, I believe it was. Let's see here. It was a $13,000, almost $14,000 correction to the downside after a failed auction breakout of the all-time high. Well, look at what's happening here today. Breakout of the all-time highs. The very next day, we have a bearish engulfing candle. All I'm saying is we could see a multi-week correction down that could give us a multi-$1,000, maybe another $13,000 drop to the downside. And coming down to 108K would be about a $14,000 correction, about the same type of correction that we saw right in here. It doesn't mean a bear market is in. It just means a bigger correction could come. Okay, so what will price of Bitcoin be tomorrow at 4 p.m.? Nobody knows that, man. What you do as a trader, you're not trying to predict where the price of Bitcoin is. It's all about probabilities. And the probabilities right now on higher time frames are still bullish. We still have a higher probability of continuing this bullish market structure. But now that we're breaking locally, we could expect some corrective targets to come in, corrections down to lower targets to come in. So it's not about predicting where the price is going to be at a certain time. It's about finding those levels of confluence of support and resistance, mapping out those levels, and being ready in whatever scenario comes. If the bearish scenario comes, we map out our bearish support levels to look for longs when we hit that support. If we are going to continue bullishly, we look for resistances for hedge short positions or, short positions if we have confirmation. Russell 2000 breaking out. You guys have no clue. Well, we'll see if the crypto market might follow the traditional market, but the crypto market is heavily leveraged, unlike the traditional markets. And, you know, we'll just have to see. We'll have to see how this correction goes. It's still early in the correction, and it was a news-based crash. And we do know that news-based crashes are not as, I guess, firm or steady as a real correction based off TA. We did have some TA aligning with this, though. So as a trader, you need a bias trend, and you need to have some percentage assigned to each bull bear scenarios. If you don't, I think I thank you for being exit liquidity or bag holding. Tiamat, absolutely, man. You see, I understand you get it as a trader. As a trader, you're mapping out both bullish and bearish scenarios. You're mapping out your key areas of resistance and support, and you're trading whatever comes. It's not about predicting what Bitcoin is going to do. It's about being ready for whatever it does, both bullishly and bearishly. And then you're going to look at your confirmations. You're going to look at market structure. You're going to look at whatever you use to enter and exit trades as that confirmation to pull the trigger. MJ25, welcome in, man. Thank you so much for joining. Okay. Could you please guide us on how to plan a trade? Yeah. Hassam, I will show you guys how to plan a trade. So like, say we're coming down to our 116K target. Let's zoom in here on the 2-hour chart, 1-hour chart. And we're coming down to this area of support here. We've already mapped out ahead of time that this is an area that we're interested in, right? Because we have our golden pocket, our value area low, our daily level. And our pitchfork band of support. So we already know that there's a confluence of support in this area. Now, as we're coming down to this area, we're making, obviously, we're ebbing and flowing, making lower lows, lower highs, lower lows, lower highs. We have bearish market structure locally. So as we come down into this area, we want to see a bounce from that area. Now, there's a couple things you could look at. You could zoom in on like the 5-minute or 1-minute time frame, and you could look for a bullish break in market structure. So say we're on the 5-minute time frame, and let's just say our previous low was right here. We bounce into our level of support. We break that previous low, meaning you're starting to break market structure bullishly. You could long on the break of that previous low, or if you wanted to be safer, you could wait until that bounce happens, and then you start to get a retrace, maybe to backtest that prior high or to backtest your local golden pocket, and then you can enter right in this area after confirming a bullish break in market structure on lower timeframes. Of course, your stop would go below the low of whatever was created, and you would be targeting your next, in this case, I would be probably targeting the value area high of our range because we're bouncing from value area low. So you have a high probability to rotate up to value area high. So that is one way. But as far as market cipher B and NAMI goes, these are momentum and money flow indicators, right? So it's giving you, most importantly, is money flow. So let's go ahead and zoom in on the 15-minute chart. And as we're working our way down, now you can see we had our big violent flush down, especially right here, big violent flush. And now we're starting to find some sellers exhaustion. We're starting to get this descending channel here. And that is a sign that we're starting to get exhausted. So as we're grinding down in this descending channel into our support level, we're going to be looking at market cipher B and NAMI to see if we're seeing bull divs. So you want to be seeing lower lows in the price action as this channel develops. And you want to be seeing higher lows in the momentum waves, higher lows in the momentum waves. Right now, we are seeing 15-minute bull divs already confirmed. So, and because this was such a big dump, you're not going to be looking at the 4-hour time frame, or such a quick dump. I'm sorry. You're not going to be looking at the 4-hour time frame. You're going to be looking at like 30-minute, 15-minute, 5-minute, even 1-minute chart. And if you're developing bull divs coming into your local resistance, now, in the best case scenario, you want to see also money flow bottomed out and starting to curve to the upside. Money flow bottomed out, starting to curve to the upside. This is where NAMI is really good for scalping, guys. NAMI is excellent for scalping. And look how good this signal that NAMI is giving us right now. And so we're seeing the bull divs, 1, 2, 3 drives of bull divs on NAMI. We have 1 drive of bull divs here on market cipher B. Money flow is starting to curve up. It's been curving up on NAMI. So if we came down to this support level and continued to see bull divs develop, so say we top out here hitting into the top of this channel, we roll over, we come back down, and we make another momentum wave that is another higher low, right? And then with NAMI, say we come down here, we make another momentum wave that's another higher low, and money flow is now crossing into the green and is a little bit in the green here, and money flow is coming up steadily here, then that would absolutely be a confirmation for me. We have bull divs on momentum. We have money flow coming to the upside. We're coming into our level of support, and we see that would be a confirmation to look for the trade. So I would enter the trade. Once I started seeing the bounce, I would enter the trade. my stop probably would go below the value area low of the range, and I would be targeting as a TP1 the value area high, which is also where our VWAP is going to be. But overall, you could be pulling a golden pocket from the highs of the correction to the lows. I'm just going to put it in the middle of the box. You'd be looking at that golden pocket, because if you are going to see a bigger ABC correction, like an ABC, then you could be looking at a lower high potentially in a bearish case scenario. So you'd want to be aware and ready to take some profit at that golden pocket retrace level. So that is a way that you can look at entering a long position. Now, the way you're going to enter this long position, whatever your portfolio is, say you have $1,000 portfolio. Let's just make it easy. $1,000 portfolio. You can see that the stop loss on this trade here, the stop loss is going to be about 0.49%. So generally you're risking about 1% per trade, 1 to 2%, sometimes on bigger swing trades, 3%, whatever. You shouldn't be risking 5, 10, 20% per trade of your entire portfolio. You should be risking small amounts every time, quick and steady. All you're trying to do, it's not gambling, this is trading. So as you're coming down into this support level, first of all, let's just go with 1%. Say we're going to risk 1% of our portfolio. That's generally what active day traders risk per trade, 1%. So if our account size is $1,000, then 1% of $1,000 is $10. So we're going to be risking $10. That doesn't mean your position size is $10. That means you're risking $10. That means if you get stopped out, you're going to lose $10. You're going to lose 1% of your portfolio. So as we're coming down here, we have our confirmations. We enter the trade. Our stop is going to go below the low. Now, how do we know how big our position size is? Well, if we come here, this is why it's important to plan trades ahead of time so that you can get this number right here, this percentage. So 0.49%. So what you're going to do, let me grab the calculator here. You're going to take your $10, which is what you're risking per trade. You're risking 1% per trade. You're going to divide it by this number, but because this is a percent, you got to move the decimal two spots over. So 0.0049. That is going to give you, you can actually put $2,040 on this position, let's just say $2,041 on this position. And if you get stopped out, you're only going to lose $10. That is going to give you, now, this is where leverage comes into play. We do not have $2,000 in our account. We only have a $1,000 account, remember? So now this is where you can crank up the leverage to 3x. You have now $3,000 in your account. 1,000 is your own money. 2,000 you're borrowing from the exchange. Now you can come in, you can put in your position size of $2,040. And then if you get stopped out, you'll lose $10. But it's all based off of this rate here, this percentage, your stop loss. It's your position size is based off of your stop loss. And the amount of leverage should not be, you can put that to 10x, you can put that to 50x. But as long as you're calculating that position size, if you long this on a 3x, because you need over $2,000, so let's just say a 3x, which would give you $3,000, and you get stopped out, you're still going to lose $10. If you long that same level on 50x and you get stopped out, you're still going to lose $10. All the leverage is doing is decreasing your margin used for the trade. So that is a way that you do trading. And if you want to be long-term successful, you need to be mapping out your key levels ahead of time, calculating your risk ahead of time, and using that risk management. It's key to use risk management in trades. Okay, so yeah, that's kind of how you do that. Hi, Divine. Thank you for the update. Speaking of Bitcoin at 50K, what do you think the odds are that we would get back to these levels during the bear market? Well, MF Jord, it depends on how high we go. So we don't know when the bear market's going to be over, or the bull market. But let's say the bull market ends at 145K. You know, I have a key target around 145K. I know Jason Casper does. But let's say we get up to like 145K, somewhere up in this area, and the bear market ends. The bull market ends and the bear market starts. Then we would be looking at our entire impulse up. We'd go in on the weekly time frame. And historically, anyways, Bitcoin has retraced between the 786 and the 886 on every bear market. But you could just be looking at, you know, like say we have our big push here in the bull market, Bitcoin retraces to about the 786. We bounce from the 786, we continue here. So you would want to look at your targets. You'd pull it from the lows of the bull market to the highs. Let's just put it up to like 145K. and you would be looking at that golden pocket area as a potential area of support. Now, that's in a very, very worst case scenario, but historically, every single bear market, Bitcoin has retraced back down to about the 786, 886 level. So we would have to know when the top is in. And, you know, if it's in now, we can pull it from the fib from now. And generally, it's a multi-year correction, like 1 or 2 years of a bear market, of a grind down here. You bounce from that support level. We can look at that once we actually start to get some confirmations of the bear market, e.g. flips in market structure bearishly on the daily time frame, breaking key higher, you know, key lows. But you would just, you know, as far as the odds, historically, the odds of Bitcoin dropping quite a bit are, you know, very high, very, very high. But we don't know where it's going to end yet. Now, everybody says this time is different. And I actually do think that in some respects, because now we have institutional money in Bitcoin. We have spot ETFs, and the spot ETFs are going to change the way Bitcoin fundamentally trades. So do we see in a bear market, do we see a drop all the way down to our 786? I do not think so. Actually, I don't think that we're going to go below like the low 40s ever again. I think that what was the spot ETF, kind of the breakout and the launch of the spot ETF, this area right in here, it was also kind of the point of control of our previous bull market range in this area, that point of control of our previous bull market around 40K. I think that's going to be the bottom, honestly, but we don't know. We don't know. We don't have a crystal ball to tell us. All we can do is look at our data as it develops. So we can figure that out once we start to see this bull market is ending. Then we can start looking at more macro targets for the bear market to end. And in worst case scenarios, yeah, maybe we do retrace back down to the low 30s, but we just don't know yet. You know, we just don't know. And there's no sense in trying to map it out yet until we get confirmation that the high is in, which is like bearish breaks in market structure. We are starting to get some big warning signs, seeing those weekly triple drive of bear divs, but money flow is still rising. And so we want to see that money flow roll over and confirm the bear div on money flow. And we'll look at it from there. Okay, let's see here. What's up, Leonidas? Hi, Divine Hood. Could you? Yeah, we'll cover AVAX Suite. Yes, we'll start getting into some of the altcoins, guys. Lifetime membership for NAMI is $750. Let's see, where did that go? With Divine Hood's 50% off code. Yeah, guys, I do think if you're going to be an everyday day trader, especially a scalp trader, NAMI is a scalp trader's paradise because it is much quicker than Market Cypher B on money flow and momentum waves. So if you're someone who comes in and trades like New York session only, and you're looking to scalp and, you know, scrape 1% from the market every single day as a scalper, then NAMI is a great, great tool for that. Let's come in here and let's just kind of see what Bitcoin's doing. Yeah, guys, I mean, we are attempting to hold this anchored VWAP, which we definitely want to hold this anchored VWAP, but I do think that we might lose it. We might come down to that 116.3, and we'll just see how Bitcoin's going to react here at these, you know, this is our local support level right now, being the point of control of the range in confluence with that anchored VWAP. If we really start to lose this, then it's almost guaranteed we come down to 116.5, 116.3. Let's see. If Bitcoin is going to 108K, then short the farm now? No, Ben. We have already dropped, what, like a few thousand, $5,000, $6,000 today? How much have we dropped today already? And you're not shorting at the bottom of a $7,000 drop. What you're going to want to wait for is some sort of relief bounce to make a lower high, and then you would look for a short. So upon that lower high, maybe we're going to bounce from this POC, come back up to the value area high of the range. And if we reject on a bearish backtest of the value area high after a failed breakout of the range, then that could be a good short to look for to bring down to the value area low. Now, if you're going to do that, you can't, like doing a short here, putting your stop above, let me get that short position. If you're going to short here, you're going to put your stop above the highs and be targeting the value area low. That risk reward ratio is horrible. You can't, you know, you should be using a 2.5 to 1 risk reward ratio or better. So in that scenario, I would be waiting for the rejection. Once we start to reject and break like 1 minute market structure bearishly, then you're going to come in here, you're going to short. So your short's going to be a little bit further down, and your stop would go above that high from wherever that wick was that you rejected from. And that would give you the risk reward ratio to look for the scalp short to the value area low. Some people have a lot of bias. Yes. And you know what? DJG009009, the bias wrecks a lot of people. They become a perma bull or a perma bear, and they just do not follow. Your sentiment should change on what the data is telling you. And so we do see a lot of people that get stuck in their ways or become like a XRP Army fan or a Link Marine, and they always think it's going to go up no matter what because they love the project. And just psychology is a big part of trading, guys. It's a big part of trading. Jesus Save 77, thank you so much for that comment, man. I appreciate your support so much. That is a bear market 6-month correction. Well, guys, in November, if you go watch my videos, actually it was in December, when we were in this range here, I was actually calling for distribution based off of not only hitting the top of the pitchfork, we had our total market cap chart hitting some very, very key resistances up here. It was a pitchfork as well. Let's see, is this the pitchfork? Not that one. This guy right here, we were hitting the top. Let me just get rid of this range real quick. Hitting the top of a very key pitchfork, and we were seeing bear divs confirmed on the daily time frame, money flow draining out of the asset as the range formed. So we were looking. Go watch the video. It's called the Wyckoff distribution video. I posted it, I think, in early December. I was actually expecting this thing to drop and distribute down. And we looked at that based off technical analysis. And from that all-time high, from completing the 5th wave of our weekly impulse in this area, we were looking for a potential drop, correction, and another drop here that could take 9 months to a year. Well, it's been about 9 months now. And yes, we did take out the all-time highs, but in a flat scenario, you can come up to that 1.382, reject in a 1.382 and a B flat, and come all the way back down and take out the lows of C, or the lows of A in your C wave. And that would be that guy right there. So we don't know whether that's going to happen yet or not. It's too early to tell. We're just starting this correction, and actually this whole big move up could still be intact. Technically, it is still intact as far as daily market structure goes. But yeah, I mean, we do need to look for a multi-month correction. Same thing, SEC Chair Paul Atkins to discuss Project Crypto tomorrow. Interesting. Thank you, Tiamat. Tiamat, thank you for always giving us these good news headlines, man. You keep us really updated in here, and I appreciate you, Modern. I appreciate all those updates you always give. What do you think the odds are we'll get? Okay, wait, I think I did that. Everyone has their own opinion on how low will bottom. Well, I think I just covered that, MF Jord. I don't think that we're going to go below. I mean, if we even came down to 51K, I would be surprised. But this 49K area, let's zoom out here. In our 2024 lows at 49K, I mean, we do have some key weekly levels down at 51K, a weekly level. And we do have a really key weekly support level down there, that naked weekly POC down there, that I think would be nice to see. But in a worst case scenario, maybe we come back to the low 50s. I don't know. We don't know, because we don't know where we're topping out yet. But let's just say if the bear market is in, we could, based off history, we could expect a significant retrace in Bitcoin, because historically it has retraced really to the 786 at the very least every single bear market. Let's see, BTC resistance, BTC sucks sometimes. Yeah, BTC, well, BTC is actually a really great asset. It does respect TA so well. It's got a lot of liquidity. It's just, it's volatile sometimes. So yes. If this, then that. Yes, if this, then that. Yarbrock 1, absolutely, man. You understand. It's trading, right? So if this happens and it comes into your setup, then do that. If it doesn't happen, then don't do that. You be prepared for every scenario. What is my favorite indicator and my favorite trading platform? Well, my favorite indicator is both of these guys. I would say Market Cipher B and NAMI Trading. They are by far the best because they have momentum and money flow together. And they're both very highly accurate. As far as trading platforms, I trade on multiple platforms. I mean, BYDFI is a partner of the channel, and recently I've been trading on BYDFI a lot. They have great liquidity, very, very good order books, and I like this platform. I'm also on MEXC. I'm on a couple other ones. So it just depends on what you want to do, and always, we're in this, let's be real, we're in this for the money. So go where you can get good deposit bonuses, go where you can get good trading fees. Go whatever suits you best. Like Bybit is a great exchange that I would personally be using if I wasn't in a restricted area. But because I'm in a restricted area, I cannot use Bybit. The people who sell it sucks. Yeah. Welcome to trading. Yes. Okay. Okay. Yo, Divine Hood. What's up, man? Good to see you in here. And Hassam, absolutely. I hope that explanation helped you a little bit. I hope that helped. But you're looking, as you're coming down to your key levels, as you're making that market structure down to your key levels, really what I'm looking for is bull divs. So as we're coming down, you want to, on your momentum waves, you want to be seeing bull divs. So higher lows in the momentum waves, lower lows in the price action. That's considered a bullish divergence coming into support. And generally, you want to see money flow bottomed out and curving to the upside on that same time frame. And that's what I use for confirmations to enter trades. Tiamat, I'm sorry, man. You know what? I am a huge lover of Chainlink as well. Actually, Chainlink, as far as spot goes, is one of my biggest holdings, and I am a fan of Chainlink, but I am not married to any single crypto. This is not about holding as much Chainlink as you can so you can call yourself a Link Marine. This is about learning to make money in the market so that you can be financially free and support your family and live the life that you want to live. Bitcoin, welcome in, man. Thank you for finally catching a live stream. I appreciate that. Awesome channel. Glad I found you. The only thing I think would be even better is adding liquidation levels to your chart. Yes, and actually we do look at the liquidation levels. We come into our liquidation heat maps here, and we do check out those liquidation levels. Like you can see on that low that we made today, we took out all of our local liquidity below us. And that's partially why we're seeing a little bit of a bounce today, is because we finally came out and took out that liquidity. Now, if we look at the last month of price action, which has been that range that we've been in for about a month, this upper range right in here. Let's zoom in on this. Let's go to the 2-hour chart. And this upper range in here is really where this is our relevant price action. That's why we're trading the range until it breaks. We attempted to break out of the top. Now we're back in it, so we can expect maybe to fill it, right? To come down to the bottom of it. But we're looking for the liquidity of our most recent price action, because liquidity acts as a magnet. That's what market makers use to prey on retail. And we are retail, guys. No matter how big you're trading, if you're trading $1 million positions like Jason, you're still retail compared to the market makers. So they prey on that liquidity, and we do look at those key liquidity levels. You can see here, we finally took out the liquidity to the upside. First, the other day, when we hit up into 122K, and then yesterday we took out the liquidity above the highs there. Now the majority of the local liquidity is actually below us, and it's actually not that much until we get way further down. Can you teach what are hidden divs? Yes. Okay. So a regular bull div is when you're making lower lows in the price action and higher lows. Let me come in here, and higher lows on your momentum wave. So you have a big, deep momentum wave and then a shallower momentum wave, right? So lower lows in the price action, higher lows in the momentum waves. Now, on a hidden bull div, you have your momentum wave, you have your first momentum wave, and your second momentum wave goes deeper, right? So it's deeper than your first momentum wave, and your price action is making a higher low. So you see your price action is making higher lows here, but you have lower lows here. That's a hidden bull div. It's very similar to the way your CVD, your open interest works in CVD, or your CVD divergence works. It's kind of the opposite of a regular div. So that is a hidden bull div. And you know what I would recommend for you? If you just go onto Google and you search pictures, images of like hidden bull divs versus bull divs, you can look at CVD divs. There is many charts on the internet for free that you can print out. And until you can get used to spotting them with your eyes without like having to look at it, print that chart up and post it on like near your screen, post it above your screen so you can look at, always remind yourself what a hidden bull div looks like, what a regular bull div looks like, and get used to seeing what those are before eventually you'll start to see it by eye and you won't need those charts for help. But until you do, use the tools around you to become a better trader. Okay. What will be on the impact of Putin-Trump meeting on crypto? That is honestly a very, very good question, Mohit Grover. And I don't know, man. You know, I think that it could be definitely a catalyst in the market. And if it goes really badly, that's just going to cause more uncertainty. And we do know that markets hate uncertainty. So just, you know, be ready for volatility is what I would say. We don't know what's going to happen, but be ready for volatility. Oh, you guys, Tiamat is going to post in the Telegram a CVD div setup chart. So thank you, Tiamat, for doing that. And yeah, you guys just look up some of these charts, use the tools around you. Ask ChatGPT, hey, can you show me an image chart of what a hidden bull div looks like on trading? Do whatever it takes for you to kind of get that down and learn. But yes, okay, can you guys help me pump my new token? It's Base Observer on Base, trying to raise the market cap so I can list it on. Man, J Bone, that's very, very risky. If you or anybody, and I'm not saying you're doing this, but if anyone holds a certain amount of the token, you come in here, you ask people to put money into it, it pumps. Generally, the early players will sell out of it and leave those people hanging with the bag, a worthless bag of tokens. So, guys, be very, very careful buying any new token, any new launch. I'm not saying that J Bone is a bad guy at all. I have no idea who he is, but just be aware of that. Yes, we do have bull divs, guys. Let's go ahead and come in. Now we'll go through some of the altcoins, but coming in onto Bitcoin real quickly, we do have some bull divs developing on the chart right now, but you can see on Market Cipher B, our money flow is starting to roll over again. And even on NAMI, it's crossing into the red again. So we want to see, and first of all, we're not at our target yet. So I actually do want to see this thing kind of continue down and develop more drives of bull div. Like if we do this here, but I want to see that money flow bottoming out and starting to come up here, and bottomed out, starting to come up here. Like these little humps that you see, like a little hump here, hump here, hump here, hump here. I want to see that trend continue in the money flow. Now, guys, real quick, let's go into our open interest charts. You can see here on our open interest charts what happened earlier today. Well, first of all, we got the big dump that happened, a huge dump in open interest. That just means a lot of people are getting wrecked. We saw a lot of people get liquidated, a lot of people get stopped out of their positions. And then towards the bottom, that was our POC of the range and our anchored VWAP. We saw a lot of fresh longs coming in. If you look here, what is CVD? CVD is active market participants. So if CVD is going up, that means you have a lot of active market participants that are longing. And how do we know those are new longs that are coming in, not just shorts getting stopped out? Is because our open interest is increasing here. So right at support, which was a decent support level, we had a lot of fresh longs coming in here. And you can see now that we're dropping, our open interest is decreasing, meaning those long positions that opened up are now starting to get stopped out. And we are seeing our CVD start to drop now because it is a forced sell. So that is that. Give me just a second, guys. I am getting a phone call. I will be back hopefully in 30 seconds. Give me just a second. Okay, guys, really sorry about that. I am back. Let's go into some of the altcoins now. So let's go ahead and go into Ethereum real quickly here. Ethereum, this is very, very important, guys. And I actually just posted about this in the Telegram group. But Ethereum, let's zoom out onto the daily time frame and let's look at Ethereum's main pitchfork that we've been watching on Ethereum. So Ethereum was attempting to break out of the top of this pitchfork here. And we bounced, first of all. We worked our way up through the pitchfork, had a range in the lower band of our pitchfork, busted above the midline, ranged for a couple months. We did see a drop down below, but bounced from that key anchored VWAP, maintaining strength, maintaining our overall trend. And then we shot up to the upper band. We formed a range around the upper band, breaking above our 4-year long range value area high. So the very key level for Ethereum not to lose is that like 3450 level, 3425, 3450, this area right in here. And we bounced from that area, came up, and we made new highs locally, even almost breaking the all-time high, getting just very, few $100s away from the all-time high. But we broke out of the top of the pitchfork, and that was what was key. So let me go ahead and get rid of this locally. And you can see here, breaking out of the top of the pitchfork, we were expecting continuation and a push up. But what we were looking for is if we did break out of that pitchfork, see a bit of a failed auction and fall back inside the pitchfork, then that is somewhat of a bearish setup that we could look for a bearish backtest on lower time frames. That was that short position that I just had posted there. I posted that earlier in the Telegram, where if we do come up here, fall back inside the picture work, come up, bearishly reject, I expect us at least to come down to take out our lows and to continue this bearish trend. Because what we're seeing here is a failed auction breakout of the pitchfork. And if we take our range and we look at this range of the breakout of the pitchfork, we are down below the value area low of that range. We have lost the value area low of that range. So we could expect a continuation and a breakdown here. So, and if you look here, 15-minute money flow looks very bearish. Yes, we are seeing bull divs. Now, actually, we're not even seeing bull divs here. We are seeing higher lows in the price action, higher lows in the momentum waves. Now, on Nami is printing some bull divs very locally here. That was printing some bull divs there, locally, and that gave us that little push up to back test. But as far as higher time frames go, let's zoom out now to the hourly chart. Money flow is leaving the asset. Money flow is in the red on Nami, which does have a quicker money flow. And we are dropping down below some key levels that we really wanted to maintain above. So for me, I'm a little bit more bearish on Ethereum, expecting a little bit more of a drop here to come in. Even if we look at our prior range lows and we pull it up to our new highs, that golden pocket coming in is a level where we should be expecting potentially Ethereum to fall down to. You can also see that it is an important support resistance flip. Our prior highs were right in there. Highs, highs, highs. Now it could be acting as support. If we are going to maintain bullish momentum, bullish market structure, higher high, higher low, higher high, higher low, higher high, higher low, higher high. We want to really maintain above this local golden pocket. Now, if we are going to see bigger dump, like if today's daily candle does close back underneath this pitchfork level of about, what is that? 45.75. Let's say 45.75. If we close down below 45.75, we might be seeing this as a failed breakout of the pitchfork. We're re-entering back within the pitchfork, and there is a very big scenario that you could fall all the way back down to the upper band of the pitchfork again, around 37.25 to 37.68. So if we look at the big pullback that we could be expecting, if we're seeing a bigger pullback, this is your third wave, right? We have on the daily time frame, we're looking at a big 5-wave impulse to make new all-time highs. So we're looking at this push up. We've been looking at this for weeks now. A wave 1, a wave 2, a wave 3, wave 4, wave 5 to break to new all-time highs in this cycle, potentially coming up to $7,000 or higher. So in our wave 4 correction, if this wave 3 is over, let me see what is this? Let's get rid of that. If our wave 3 is over, which it potentially could be, but it doesn't look, we have a 1, 2, 3, 4 and a flat, and then a 5. Now this 2 is not the nicest 2 here, but this potentially could be done. This third wave could be done here. And if this third wave is done, then you want to take a Fibonacci from the lows of the third wave to the highs of the third wave. And in order to get your larger fourth wave corrective move, you're looking between the 0.382 and the 0.5. Well, first of all, if we come down to this 0.5 Fibonacci around 34.50, absolute long trigger for me. Why is that? Because that is also the macro value area high of our 4-year-long range. If we look at our big range that Ethereum has been in since May of 2021, you can see the value area high of that range is right there at the lower band of your upper pitchfork, the lower part of your upper band, excuse me. What else do we have there? Let's zoom in onto the 2-hour chart. You can see that we do have a fresh weekly level right at 3,500 pretty much. We have a fresh naked daily point of control right there. We have the value area high of our big range. And if we pull a Fibonacci from the highs or from the lows to the highs of this impulse, you can see that we will have a 886 coming in. Oops, wrong one. Let's grab this guy. 886. You can see our 886 is coming in right around that area as well. We have a lot of confluence of support. This for me here would be an absolute strong level of support to be looking at. And really, if we want to maintain bullish trend on Ethereum, we do not want to break back down below our macro value area high. That is the most important thing to look at on Ethereum on a macro time frame, because we are breaking out of our 4-year-long range. So if we make new highs, which we haven't made new all-time highs yet, but we made new highs on the daily time frame locally, and if we do retrace here, we want to see that bounce before seeing new all-time highs, seeing our bigger 5-wave impulse. And guys, the end of the third wave could be over. We could be about to see a bigger drop down that takes a few weeks, like this range here. If we measure this range here, let's just do this. It took us about, 41 days, 40 days or so. So that's your wave 2 correction, a flat correction in here. Now, if we are going to see a wave 4 come down, and that wave 4 correction should take about the same amount of time or a little bit longer than this guy here. So we're seeing our wave 1, our wave 2, wave 3, wave 4, and a wave 5 coming up to make new all-time highs. But if the end of the third wave is in, and we don't know for certain yet it is, but losing this pitchfork and closing a daily down below it would give us a sign that it could be. We are going to be expecting a 3-wave corrective move down between your 0.382 and your 0.5. And so those levels, you can see the 0.382 is aligning nicely with the top of the pitchfork band, and the 0.5 is aligning nicely with the bottom of the pitchfork band. Those two levels are macro support levels, more macro support levels that I would be interested in taking along up to new all-time highs, to break up to new all-time highs. Now, look at our money flow. Very, very bullish on the daily time frame on both NAMI and Market Cipher B. They are very, very bullish. So I am not expecting a big break in market structure on the daily time frame. I am not expecting a break down below this like 3370 level, 3350 level. I'm expecting us to make a higher low and to continue the bullish momentum to the upside. But we could see a bigger correction come in here. Now, let's zoom in onto the 2-hour chart, and let's just look at our local structure here, our local range. So our prior range that we were in last week was this range in here. And we broke out of that range, we broke up, and now we're starting to form a bit, this is a bit of a range, but we were really overbought here on Ethereum. We had multiple bear divs coming in here on the chart, really expecting somewhat of a pullback soon. And now that we're breaking market structure bearishly, we are breaking some local lows here. If you look at this as a local low, we're breaking market structure bearishly. So now we could look for a bounce from our local golden pocket, which is going to be coming in right here. It's the support resistance slip of this guy, the highs, our prior highs. And so this would be the first level that I'd be interested in taking a scalp long. But if we do come down there, we do need to watch for a bounce just to create a lower high and then come back down more. We do have that fresh daily level. You can see that fresh daily level is coming in right where the point of control of our previous range was. So that 42.24 is another level of interest where I would be interested in looking for a scalp position. And if we turn on our naked daily points of controls, you can see really our only fresh naked daily point of control is going to be down near that 382 and near that pitchfork band of support. The thing with Ethereum is we had such bullish market structure to the upside. This, let me clean this up here. This bullish market structure here has been so aggressive. This is a big trail of liquidity that has been building. We've been having people long through all of this. So if you start to break this trend, you could see a quick flush down, liquidation cascade, liquidating all those levels. So let's actually take a channel and let's look at this trend from the lows to our first higher low, and our lower, higher low, and then up to that first high. And we are now back testing the breakout of the channel. And we could even come in here with a Fibonacci channel. And let's look at that same area. See how we rejected. Let's do this. Let's get rid of this one. We did reject from our 2-to-1 Fibonacci channel level. We're breaking down and we're back testing the main channel now. So there is a possibility we can hold the break above this channel. But if we fall back inside the channel, we're going to come to the midline. Well, where's the midline? At our our local golden pocket. If we lose the golden pocket, where are we going to come to? The bottom of the channel? Well, that's where your daily is. So looking at this structure, we are starting to break, and we could expect maybe potentially a bigger drop. For me, the key is going to be seeing the close above or below 45.75. Okay, let's go ahead and go on to some of these. Let's see. Let me check here. You don't understand the logic behind a hidden bull div? The logic of regular divs is understandable. Well, just A hidden bull div is you're still maintaining your bullish market structure, right? Like let's say there's a hidden bull div in here. We're making higher lows on the price action, but your momentum is going way lower. Let's just say there was another momentum wave here. Your momentum is getting far more into the oversold region, but you're making higher lows. So that just means that the momentum is strong here because you're making higher lows on price action, but you're way more oversold, but you're at a higher level. So that's a continuation signal. That means continuation is more likely, right? Continuation of the trend is more likely because you're oversold, yet you're at a higher price. So that's a hidden bull div. And generally, hidden bull divs are good to look at on higher time frames. If you have a regular bull div on the lower or intermediate time frames and a hidden bull div on high time frames, that's a very, very good signal to look for a bigger bounce. Okay. Do your own research on all projects. Yes, please, T-Mod. Thank you for that comment. Guys, always do your research on a project before buying it. Don't just buy a project because a creator or a comment on YouTube tells you to. Yes, the future was the momentum gets lower as the price gets higher, or makes higher lows, you should say. As the price makes higher lows, maintaining bullish trend, the momentum goes deeper into oversold region. I've noticed in NAMI that the signal notifications appear after 2 to 3 candles. Is this normal? Well, I do believe, Hassam, you can change the settings on that to have it appear whenever you want. But NAMI is actually really quick as far as, I mean, NAMI is much quicker than Market Cipher B as far as giving those signals. So I think you can customize that to your own liking, depending on if you're doing scalp trading or day trading or, you know, even swing trading there. But yeah, you just have to go in and play around with it. Google is your friend here. How hard to type it out there, but I can tell you, you'll see certain times that regular versus hidden divs play out. Yep. The news. Let's see. Treasury Secretary Bassett says the U.S. government is exploring ways to acquire more Bitcoin. Wow. Yeah. Well, you know what though? They've been talking about this forever until we actually see some action. You know, it's just talk. You know, we've seen over and over politicians make promises that they don't actually follow through on. So I want to see some follow through. Yes, we do have a bull div right now on Ethereum, but our money flow does not look the best. So bull divs coming in now. Actually, this is interesting. We are developing. So it looks like we're trying to hold that channel, but you can see here, we're making these higher lows in here. We're almost starting to form a triangle in here, a squeeze. But you want to see, yes, bull divs are forming, and now we just formed another drive of bull div. Bull divs are forming, and we're about to cross over. If money flow continues to roll out, I expect us actually to come down and sweep these lows and probably sweep into that golden pocket. But if we can maintain, like if we now close the daily candle back above this what was it, 30, 45, 70, 75, I expect us to continue to push up. Actually, probably breaking all-time highs. But we're trying to see whether or not we're going to have that money flow. And let's zoom in on the 5-minute chart and let's see this. So it looks like, yeah, money flows attempting to roll over again, both on NAMI and on Market Cipher B. So I would just be aware, and it looks like we're just forming a little trail of liquidity that could get swept. So just be aware of that. Okay, let's go into some of the alts now, guys. I need to scroll up in the chat. We'll look through some of the alts that people were talking about. Oh, and we do need to look at the super chat alts too as well. Okay, ENA and Tau. Let's do ENA, USD. Man, okay, so ENA doesn't look like I've done TA on this in a long time. This guy we can get rid of now. Is there a better chart for this? There we go. Okay, so looks like ENA, we're breaking above our golden pocket, our log golden pocket, which is a good sign here. And our next level of major resistance was coming up to that 786 at the top of the pitchfork band, the upper band around 91 cents. This is very bullish momentum so far, and we are now, if you look at this, we are trying to attempt to maintain that bullish structure. We are bouncing from our previous highs. So that is a good sign that we are attempting to bounce from our previous highs. Let's just put, let's just do, well, I guess, yeah, whatever. Those highs right in there. Now, and also bouncing from the golden pocket. Now, one thing that I have realized is on golden pocket, when you break them to the upside, oftentimes you will back test it as a support level. So if this holds here, then we can expect to move up to 91 cents. It does look like money flow looks pretty good still, but it's starting to roll over. So if we close this daily candle red, it's probably going to roll over here, and we've already confirmed the bear divs. Higher highs in the price action, lower highs in the momentum waves. Bear divs confirmed on NAMI, and if we look at NAMI's money flow, it is attempting to cross into the red again here. Actually, let's just pull this up full screen. You can see now it's crossing into the red again and coming out. So it does, if we lose this golden pocket area of about 69.70 cents, about 70 cents, then we're probably going to see a bigger move down. And we're going to move down to our, let's get rid of this here and let's mark out our daily level. We're probably going to move down to this daily level down here, which is in confluence with our midline at 57.7. Let's mark that out, daily level. Let's pull our golden pocket from the last daily lows to the daily high. And let's put on our JC pocket. So golden pocket 786 area. That 786 is right around that daily level and the pitchfork there. So I would suspect that we might come down to that area of 58 to 57 cents if we lose the area that we're at right now of support. We do have daily bear divs, which could mean we're expecting a bigger drop. Now, in this push up, wave 1, wave 2, 1, 2, 3, 4, 5, 4, 5. It's not the cleanest looking, but we could look at a double 1-2 impulse, a wave 1, a wave 2, wave 1, a wave 2. And then we have our 3 here, which is big. Let's look at our volume. Yeah, volume's increasing a lot here. Then you could look at a 4, 5, 4, 5. That would end your double 1-2 impulse. And if it's the end of an impulse, then you could even expect a bigger correction. So you'd pull a golden pocket from the lows to the highs of the impulse. We would want to turn that on log scale because that's more than 100% move to the upside. And in worst case scenario, you might come down to backtest this 37 cent area, which is your lower band of the pitchfork. Let's zoom out onto the weekly. Yeah. Okay, we have a fresh weekly that's right around that area as well. We can throw that weekly on there. I mean, this general area of support between 59 and 57 cents is a very nice area of support to be looking at. Ooh, I want to check something real quick here. If we do a Fibonacci pull here, let's turn on our 886 and let's make sure that's on log scale. We did tap into our 886 down here. You can see that's where we bounced from way at the bottom of this impulse. And unfortunately, because we tapped into this 886 on a larger downtrend, we have our high, which was the listing high, low, high, higher low. But there is a potential that we could come all the way back down to take out these lows. It's not likely yet, but it does give at least a little bit more of a probability. Until we lose market structure bullishly on the higher time frames, I'm not even considering it. Let's zoom in onto our daily time frame again. Let's look at our naked weekly points of controls. Ooh, okay. Yeah, I mean, this area of support down here is like a spot buy area of support. You can see it's our macro golden pocket. It is our naked weekly point of control. It is a, let's mark that real quick. It is the lower band of the pitchfork and your macro log golden pocket. So that is definitely an area I'd be interested in, a spot buy, potential spot buys on ENA. So 30 was that like 37 to 35 cents. But really, we want to maintain and break above. So it looks like we're bouncing from, or we're attempting to bounce from a naked daily point of control. Let's go in on the hourly chart. Attempting to bounce from that naked daily point of control, but not seeing much of a bounce here. And so we could expect to fall down to our next support level. Now, one thing that I do see here from this low of August 2nd It does look like we could be in the last little impulse, on a higher daily impulse, a wave 1, a wave 2, wave 3, wave 4, and then we could see a wave 5 finally coming up to that 91 cent area. Remember, that 91 cent area is where our macro 786 was as well. So coming up to 91 cents, let's look at to see if this impulse has been invalidated. So in that case, we're going to pull a Fibonacci from the lows of wave 3 to the highs of wave 3. And let's turn on our wave 4 targets, which is between the 382 and the 0.5. Okay, we are in that zone where we could expect a bounce, but let's turn on our golden pocket and let's see if we've hit in the, and you have not invalidated yet. If you hit this 67 cent area, it will invalidate this as an impulse. And then we could expect at least to move down probably to like that 59 cent area. But we have not hit that yet. And we are in the area where we could see a bounce. Let's go ahead and zoom in on lower time frames and see if we are going to see some support coming in. Yeah, we are seeing some bull divs. Actually, no, we're not. We saw very slight lower low here and like a wonky here. Money flow is curving to the upside, but we did just print a hidden bear div signal on the high, and money flow is starting to come out again. On Market Cypher B, it's rolling over on NAMI. So I would suspect that we're going to keep dropping here on this asset. Let's zoom into the hourly. Yeah, we're kind of breaking this channel down, and actually we could even pull this channel down to here. Yeah, this is our corrective channel. So you see we're rejecting from the midline right now, and I suspect that this trend, this topping trend here, and this correction down could last at least till we come to this local golden pocket. Let's check. At the value area low of our local range, if we break this, then we're most likely coming to 67 cents. Oh my gosh. Can you guys hear that rain that's going on? I have skylights in my room and in this room, and it is super loud again. Wow. Anyways, ENA looks like we can drop. What I would be interested in on ENA is coming down to this weekly level and the pitchfork midline. Coming down to between 59 and 57 cents. If we see a bounce from there, we could look to take it up to 91 cents. And if we look at our trend, and our trend is going to remain strong, well, let's make sure that's on log scale. Then bouncing from your macro 382, if you're going to maintain a bullish trend, the 382 often acts as support or resistance in a strong trend. So if this is the high of this impulse here, and we are going to see a bigger correction, then what we could be looking at, let me just clean this chart up here. We'll hide this channel for now. We could be looking at a bigger three-wave corrective move, coming down here, bouncing from 57, coming up to your local golden pocket, and then coming down and grabbing the liquidity of the last daily lows into your macro 382, and then you could see continuation up here. So that 51 cent area, the SFP into your macro 382, could be a good level to be watching as well. All right, let's go on to Tau. I believe. All right, I know I have a chart somewhere here. Huh. All right, well, let's just look at it freshly here. Let's see. I know we've done this before. Was it MEXC? All right, here we go. So it looks like on Tau, Let's make sure we got this updated. This is our big range on the daily time frame, really going back to December of 2023. Let's pull this all the way. We are still inside that range, and looks daily time frame from our lows. We saw a very nice clean 5-wave impulse. 1, 2, 3, 4, 5. Let's pull our golden pocket here. Golden pocket. Yeah, now we did correct down to your golden pocket in your wave 2. So if this is a wave 1, this is a wave 2. We could be expecting in the very bullish case scenario a wave 3, 4, 5. But because we're seeing this drop here, we could be looking at a double 1-2 impulse. In a bullish scenario, you have your wave 1, your wave 2, internal 1, and internal 2, and then you want to see this thing break up here. Start to break up quickly. So let's check this out. Hold on, let me check the chat. Can you guys hear that rain? Oh, Splashfire Films, welcome in, man. Welcome in. Yes, you guys can hear it. Isn't this crazy? Like, this is the second time in like a month. Mark, you probably remember this. And welcome in, Mark Dutch. Good to see you, man. Yeah, I hope I don't lose power again, because I did lose power last time it was raining this hard here. So, sorry about the noise, guys. I have skylights in this room, and there's nothing I can do about that. But I hope it's not too distracting for you guys. So let me just check something real quick here. I am going to try to do this, okay? And then let me... Okay, can you guys hear me now? Is this, let me know if you guys can hear me, and let me know if that changed the noise rain at all sound. What's up, Curtis J? Welcome in, man. Making popcorn. Nah, man. No popcorn here. Although we do have quite a show here on the crypto market. Okay. No, it's not that. Let's get into this because we have a lot of alts to cover, guys. I did just turn on some noise suppression, so hopefully that helps a bit. Let's go ahead and go into Tau. So Tau is in a range on the daily time frame. We can just look at this range. This is our daily range. We're at the value area low of that range. Now, if we are going to see a bigger impulse to the upside, this being our wave 1, our wave 2, we have an internal wave 1 and an internal wave 2. Let's see if that internal wave 2 corrected to our golden pocket area. Yeah, around that golden pocket area, it did correct to, and we're bouncing, and we're also, that's a weekly level down there. So we could be expecting a big push up. But right now, or this could be a triangle in here. We don't know whether that is going to play out yet. But we are consolidating in a range. This is our range. This is what we need to be paying attention to. Now, after rejecting from the value area high of the range and seeing a head and shoulders type pattern, right? Left shoulder, head, right shoulder. We dropped down. We deviated the value area low of the range. We came back up for a bearish backtest, rejected, but made a higher low. And now we're breaking back into the range and we're holding the value area low. You can see, what was that? On Monday, we backtested the value area low, held it. And today we're backtesting the value area low and we're holding it. So far, holding it. So we can probably at least expect a move up to this point of control at 427 to 429. And I do believe there's other resistance there on my chart. I know I have another chart of Tau. Let's see here. Is this it? Tau, yes. Okay. So yeah, we're looking to come up to that weekly level at 429. Coming up to that weekly level around 429. It is the 786 of our range. It is the value, the point of control of this range. And yeah, actually it's the value area high now. It's shifted. Value area high of the range. It looks like on this chart, on Binance, the value area low is lower than where we're at now. On the other one, it's where we're at. But we're at the pitchfork midline. Okay, so pitchfork midline here. And if this pitchfork midline can hold, then we expect to move at least up to 429. 429 is my next resistance area where I'd be interested in looking for potential shorts on this thing. But we need to be aware of a bigger corrective move. coming all the way back down. And in this corrective move, you're going to want to see a 1, 2, 3, 4, 5, a 5-wave impulse to the downside. So if this is bearish, we still haven't come up to hit that golden pocket yet, which is good. And maybe that means we're going to continue pushing higher. Let's look at our, we are kind of rejecting from that 0.5 level, which is another common area to reject from in a B wave. Your B wave really between the 0.5 and the 786 is your most common targets. And then that would be a 5-wave impulse. 1, 2, 3, 4, 5. Taking out these lows. Let's see here. Sorry, guys. This rain is really, really distracting me. I am sorry for this. But we are trying to hold the pitchfork midline. Let's hide this range here. We are trying to hold the pitchfork midline of our major pitchfork. I want to just zoom out to make sure this weekly is still fresh. Yeah, so that weekly actually has not been touched at 326. So as far as our support levels, if we lose this midline, we might expect to come take out these lows at 326 and see an SFP into the weekly level that was not hit. If we hold this midline, which let's zoom in onto the 2-hour time frame. Yeah, we were seeing bear divs, guys. Unfortunately, we didn't quite make it up to our golden pocket, but you can see here, higher highs through all of this, lower highs through all of this, and our money flow is consistently draining out here. Not a good look on Tau. And let's go to our 1-hour chart. Yeah, bear divs on money. Really bad bear divs here, guys. Higher highs through all of this, lower highs through all of this, and we even have money flow bear divs here. We do have, I guess not money flow bear divs on NAMI, but NAMI is in the red now on money flow. No bull divs on the 1 hour yet. Let's go to the 15-minute chart. Okay, 15-minute chart is showing that we could get a small relief bounce. Now, I'm not saying that the dump is over. It's actually likely to continue, but you can see here, actually, no, we're not even seeing bear divs except for very locally because we had this big wick. But through here, lower lows. Yeah, I guess, and then this guy, higher lows here. We are seeing local 15-minute bull divs, and money flow is starting to bottom out here. We really want to hold this midline, which is also the value area low on our other chart, at about 361. If we do not hold 361, then I do think we are going to continue dropping. And let's look at, oh, and we were looking at this is the 1, 2, 3, 4, 5, hitting up into our, seeing our 5-wave impulse complete. So now we can pull a Fibonacci from the lows of the impulse to the highs of the impulse, and you would come down to your golden pocket. Now we've hit that golden pocket on that wick. So that is a good sign that we are trying to bounce from this. The low could be in, but it's not likely because of what we're seeing is lack of confirmation here and the bigger time frame bear divs that we're seeing. Okay, let's see. Let me get rid of this. Let me get rid of this. In a bullish case scenario, we want to hold, we want to bounce, and we want to continue. On our smaller time frames, we can even measure all the price action above the channel midline, above this red channel midline. And yes, we are still within the volume profile, but here's the bearish part, guys. We bounced from the value area low, came up to your point of control, and we rejected the point of control locally. So it does mean that we're probably going to continue down and continue to backtest. Let's check one thing here from the lows to the highs. Okay, that's only a 23% move, so that should be a non-log golden pocket. Yep. Based off higher time frames, it does look like we might get more downside, but we might be at the start of a bounce, and even this very locally could be a wave 1, a wave 2. That's your big wave 3. We could see a bounce in a wave 4 before coming down to a wave 5. If we lose this golden pocket, yes, we do have our 786 that's going to be coming in very, below us. And also let's turn on our naked weekly points of control. Let's see if we have any in here. None. And let's look at our naked dailies. Okay, naked daily coming down below here at 340. But honestly, I think that if we lose the golden pocket that we're at now, we're probably going to come take out the lows at 326.8. Unfortunately. We'll pull a Fibonacci from the highs of 3 to the lows of 3. And our wave 4 bounce target should be between the 382 and the 0.5. Technically, we already hit that 382 with this immediate bounce here. But because it was time-wise, it was very quick there, we could expect potentially a move up to that 0.5, which is around where your VWAP is, before rolling down and finishing this 1, 2, 3, 4, 5. Then after that, you'd expect a bigger 3-wave correction up to golden pocket, and then another 5-wave impulse down in a bigger ABC correction. Noise suppression available for women too. You know, I'm sure there is. I'm sure there is. Okay. Audio's all good. Okay. So that's about it for Tau. Now let's go into some of the other coins. Let's just go through all of the major ones. We'll go through. We did Ethereum. Solana, guys. Solana, we have to hold above 189. That's really key. So let's zoom out to the 6-hour chart. This is our macro value area high of our range that goes back to March of 2024, all the way back to March of 2024. This is our range. We're attempting to break out of the range again. Now, if we see another failed auction type thing like we did here and we break back inside the range, we're probably going to come down much lower in a flat correction. So what we could be seeing here is a big push down. Actually, would be a WXY correction, because this is a 3-wave move down and a W. We could be seeing a 3-wave move up in an X, and then we could be seeing a bigger move down in a Y, where we take out the lows here at 154 or 155, 56 that we bounced from. In a bullish case scenario, well, in a very bullish case scenario, we want to maintain above 189. That's our breakout of the value area high. Maintain above this, continue pushing up to that 232 level, 231, 232. This impulse, we were looking at this impulse over the past week or so, with this being a wave 1, wave 2, wave 3, wave 4, and a wave 5. You got an extended 5 there. Even though it might be longer than your 3, it is still a valid count, because we did bounce from the 0.5 here. We bounced from the 0.5, I believe, here. Both common targets. And if we take that Fibonacci from the highs to the lows and we turn on our wave 5 targets, yeah, we did break quite a ways above that area. Let's do our 2. We came up to our 2.618 target there for your wave 5. Money flow still looks relatively decent here, guys, on Ethereum, not on Ethereum, Solana. It's attempting to curve up again here, and your VWAP's bottoming out. I mean, I do think that Solana might this time, we want to see a real breakout this time, guys, of the value area high of the range. So we want to maintain above 189. If we pull a Fibonacci from the lows to the highs of our last big move up here, golden pocket is where we're bouncing from. Local golden pocket's where we're bouncing from. So at least, yeah, we want to maintain this. We did break market structure bearishly locally by breaking down below these lows. Market structure break here locally. And so we could be now, as a trader, we need to keep both scenarios in mind. We look for the lower high retrace. Pull a golden pocket from the highs to the lows of this move, and that golden pocket coming in around $201, 201 to 202, is where we could expect some sort of rejection here. If it's going to be a bearish scenario and we're going to lose the value area high. But this bounce from the golden pocket is nice to see, and maintaining and holding above, maintaining and holding above the value area high is what we want to see. Let's zoom in onto the 30-minute chart. I don't like the way this looks. Money flow is just about to cross over into the red, and we are forming a triangle here, a squeeze pattern, which actually is a continuation pattern. So if you dump into it, you have a higher likelihood of dumping out of it. It's only like a 60-40 instead of 50-50, but it does look like it could be a continuation pattern. That's considered a continuation consolidation pattern. So if we close our daily candle underneath 189, we can expect a much bigger drop to the downside. Key for Solana is to hold above 189 and close above 189. Doesn't look too good here. 30-minute doesn't look good. Let's go to the 15-minute. Yeah, money flow still exiting. Yes, actually we're not even seeing bull divs here, because we're seeing higher highs here, higher highs here. Unfortunately, it looks like Solana is going to continue dropping. Let's go to our 8-hour chart. on the 8-hour, it's not as bad as we really want to maintain, because we do have now higher highs. We had a swing failure pattern of our prior high. You can see our prior high here, swing failure pattern, liquidity grab. And in a flat correction, guys, in a flat correction or a complex correction, WXY, we could come down all the way back down and actually even come down to your point of control at 145. So unfortunately, bearish case scenario, and it does look like locally we do have more downside, but Solana needs to maintain above 189. Okay, let's go on to Sui. Sui, we're rejecting from the 1.236, guys. We saw the 5-wave impulse. 1, 2, 3, 4, 5, hitting into our target between the 1.618 and the 1.236. We're rejecting, and now we're dropping. So if we take a golden pocket from the lows of the impulse to the highs of the impulse, that golden pocket right there is where you want to hold. If this is a bigger wave 1, wave 2, and then we're going to see a big explosion in a wave 3 locally here, we want to see that golden pocket hold. Now that golden pocket has not quite been hit yet, and we want to see, it's also the back test of our channel that we're attempting to break out of. Let's pull a range, and let's look at our range for the past, month or so. Value area low is also there. So that's your area, your local area of support that you need to maintain. You must maintain this if you want to maintain that bounce for higher levels. This area between 3.66 and 3.64. 3.64. Local support. If we are seeing bull divs coming into that area, I might even attempt along there. Let me set an alert here. Okay. If we break that value area low, then we're probably going to drop much, much further. We're probably going to at least drop to the point of control at 347, but I would even say we're going to come down and actually hit this anchored VWAP that we front ran last time. And the anchored VWAP is right around the lows. It would be an SFP of the lows into the anchored VWAP, kind of like Bitcoin, what Bitcoin is seeing today, wicking past that anchored VWAP, but overall holding it. Rejecting here at the end of the 5-wave move, and we did not quite make it up to that weekly level at 432, 429 to 432 that we were watching. We're just ranging, and as long as we don't lose the range, we could bing bong around in this range. We rejected the value area high, lost the point of control, so now it's a high likelihood we go to value area low. Bounce from value area low, we could work our way up to the point of control again. Not 1 minute, 1 hour. Money flow doesn't look too bad here. It is starting to try to curve up again, and we are bottoming out. Since we have not actually hit the golden pocket yet, I want to see one more low actually into that golden pocket at 366, but I am interested in taking along from this area because it's your golden pocket of the retrace of the entire impulse up. 1, 2, 3, 4, 5, drop to golden pocket. Let me just check something here. Yeah, golden pocket, either way, whether log or not, that's your area. Okay, that's it for Sui. Let's go into Say. Now, guys, Say, unfortunately, and I covered this in yesterday's video, but Say rejected exactly to the exact cent from the pitchfork band highs again. So Say we have two ranges. We have this upper range. We have this range here. Let's take this range off for a second. And you can see that, actually, I need that range back on for a second. We rejected from the value area high of our smaller range. Let's hide this guy for a second. Rejected from the value area high of our smaller range. We also had a naked daily point of control up there, and it was the top of the pitchfork band. So the last time we came up to the top of the pitchfork band, it was where our log golden pocket was. We rejected. We saw a bit of a dump down here, bounce from our 786 level, I believe it was, from these lows to this high. And now we're continuing to range in between the pitchfork midline, pitchfork midline, and the upper band. But this upper band keeps rejecting us. We really want to get above this upper band, and we're rejecting from this upper band again. Once again, a very clear 5-wave structure, 1, 2, 3, 4, 5. And so now we pull a golden pocket from the lows of the impulse to the highs of the impulse. And that golden pocket coming in around 29 cents is going to be key. What else is there, guys? We have the liquidity grab. Anytime you see a SFP into a golden pocket, pay attention to that setup. That is there. Let's turn on our naked dailies. Let's see if we have a naked daily in there. No naked dailies in there, but we do have one a little bit above us. Naked weeklies. Let's check that out. Yeah, unfortunately, we don't have much in there. This naked daily might bounce because it's near the value area low of this range, but let's hide this range. Let's turn those off. Let's hide this range. And let's go into our bigger range. And let's look at this bigger range. If we lose this golden pocket, we're going to come down to the POC, and that POC is going to be in alignment with your 786. Pretty close alignment with your 786 there. And let's make sure that's online. So 786 POC at 28 cents. You lose that, and we're probably going to make new lows. We're probably going to come down, make new lows, and potentially even come down to back test the pitchfork midline again around 22, 23 cents. But rejection to the dollar from our naked daily. I can delete this naked daily point of control now. Rejection here to the dollar from our upper pitchfork band again, and falling back inside your volume profile is not good. Even if we turn on our other range, rejected value area high of the range. So you reject value area high, you lose POC, high probability to come down to value area low. I just want to check one thing here. Let's pull this fib again, and let's look at our 382. Okay, in a strong trend, the 382 will bounce. So we're at the 382 right now. If it's going to hold, it's going to bounce from here, and we're going to maintain that bullish trend. A very, very bullish case scenario, guys, that we were talking about the other day is a 1, 2, 1, 2, and then a big 3 here. There is still a possibility we could be in a multi-impulse 1, 2, 1, 2, 1, 2, and then we're going to see the big 3 come in here. So that's a very bullish scenario. 3, 4, 5, 4, 5, 4, 5 coming up. Man, you know, it just doesn't look good now. We're breaking below our prior highs, and it looks impulsive to the downside. We did see those bear divs on the 4-hour chart, higher highs, lower highs. Not on NAMI. Money flows topped out and curving to the downside. Let's go onto our 8-hour chart. Bear divs on the 8-hour chart. Bear divs on the 8-hour chart. Money flow crossing into the red here. So it looks like we could see a bigger pullback, at least down to this golden pocket. Okay, let's go to AVAX. Someone asked about AVAX. Now, guys, AVAX is rejecting from the top of our range. This is our range here on the 4-hour time frame. And you can see, where did we reject yesterday? At the top of the pitchfork band, almost perfectly, like literally almost perfectly. Now, I did take profit at $25 on AVAX because we did have that weekly level there. I believe it was a weekly level. Or I might be getting that confused with Chainlink, actually. Anyways, we did reject from this purple box. We saw a nice retrace, so that resistance did work. Got a scalp short from that, and then we came up for one more high. Once again, creating that 5-wave move. 1, 2, 3, 4, 5. 5-wave move, hitting into the upper pitchfork band, rejecting, falling back inside our range. Now that we're back inside our range and we're losing the POC support of the range, losing our naked daily point of control that was holding as potential support here. You can see that naked daily point of control was at the range point of control, holding as support. So we do have a high probability of now coming down to the golden pocket of this entire impulse. So let's look at that. Take this, let's delete this, let's take this. Golden pocket is coming in around 22.64. And again, guys, we're seeing this nice setup of a liquidity grab into a golden pocket. That is a nice area. It would be a little bit of a deviation below our value area low, but in a bullish case scenario, you would want to see that, a reclaim of that value area low, and then a continuation of a push up. We did front run our daily level at $26, just barely. And it would be nice, even in a sort of flat correction, come down here, come up here, and then see a bigger drop here to come up to hit that $26 area. If we lose that, we have our golden pocket at $19. And by the time we get down there, you can see we're going to have some nice confluence. We have a naked weekly point of control very close by, but it's also our lower pitchfork band. And if you lose the midline, you can expect to move down to that lower pitchfork band. At the bottom of the lower pitchfork band is a fresh weekly level. Okay, yeah, this area of support is going to be really nice because we have a daily level here. And then we're going to have a daily level right where your pitchfork midline is. So locally, let's just mark these out now. Let's zoom back in here. Locally, because money flow still looks relatively good, we are printing some bear divs on NAMI on these two highs. Higher highs here, lower highs here. And this is where NAMI being quicker can really give you a nice look at things. But if we go back to the 2-hour chart, we have some levels of confluence for support levels. We have our daily level SFP into golden pocket. Really, I would want to see the SFP into the golden pocket. The daily's a little bit higher than I like. But the next level would be the daily and the pitchfork midline, this area here. And if you lose that, unfortunately, you're probably going to come all the way down to this bigger area of support down in here. I'm going to set an alert on this swing failure pattern. And if we do see a confirmed swing failure pattern into that golden pocket, I will long it. And of course, ideally, you'd want to see bull divs coming down there as well. Okay, that was AVAX XRP here, guys. XRP is rejecting from the value area high of the range once again. We are just chopping around within this range, rejecting value area high. Now we have broken market structure bearishly, breaking down below the point of control. And this was actually now, unfortunately, a 3-wave corrective move up. And we could be seeing a bigger impulse down. A 1, 2, 3, 4, 5, pushing down. Let's look at our trend-based Fibonacci extinction. 1.618 is coming in. That could be the end of your wave 3. If we could see a small bounce from there, but then you're going to want to eventually make another new low as well. Okay, let's zoom out onto our daily time frame. Dang, money flow starting to roll over onto the daily time frame. No bear divs though, and that's nice to see. We are bouncing. Oh, not quite yet. We do have a daily level below us. And this guy down here, man. Okay, I see some nice confluence starting to come in here. Let's zoom back into the 1 hour. Let's turn on our naked weekly points of control. No naked weeklies. Let's look at our naked dailies. Okay, we have some very, very nice support down below us. So right down below us, we do have a daily level, a naked daily point of control, and a weekly level, all in very, very close confluence. For me, that is really good support. Let's pull our golden pocket from the lows of the corrective move to the highs of the corrective move. Let's turn on our golden pocket. Golden pocket is also right there. Very nice support down below us. Actually, this for me is looking like a really good long, at least a scalp long opportunity. You can see here, yes, we did hit. No, we didn't quite hit that golden pocket yet, at least on Bybit. But coming in here, looking, and actually I'll be looking at the daily level to the weekly level, naked daily point of control in there. Your golden pockets here, a lot of confluence for support between 296 and 294.5. So that for me would be a nice area to look for a long position from, at least a scalp long position to bring up to your point of control. But you can see here very locally, after seeing the big flash crash, came up to the point of control. We rejected the point of control, and now we're going to probably continue to bleed down here. And that would give us some time to develop some local bull divs on the chart here, coming into that golden pocket, coming into that weekly level. So for me, 296 to 294 is looking pretty dang good. If we lose that, we're going to probably come down much, much lower, at least to the value area low of the range at 289. But I would honestly say, and we do have some liquidity down there as well. Nice internal liquidity grab at the value area low. So I would be looking actually for a, maybe a small bounce here, come up, and then a liquidity grab into that naked daily point of control. And then you'd want to reclaim that value area low instantly. If you lose that, you're coming down to your larger range value area high in confluence with your daily. And this value area high is of our big 9-month range. If you look at our big 9-month range that we broke out of, that's the value area high. So we do have a liquidity grab into the value area high of the range, into, let's make sure we pull this. Yeah, liquidity grab daily down here, value area high. If you lose that area, 272, if you lose that area of support, unfortunately, guys, we could see a much, much bigger drop down here. Let's actually look at this. Actually, I'm going to hide that. Let's pull our channel of our corrective move. Yeah, midline is also coming up very quickly here, guys. So that midline is very nice. That support level just below us is super nice because look at, we have a channel midline there. We have our golden pocket. We have our weekly level. We have our daily level. We have our naked daily point of control. A lot of confluence just below us. XRP, as far as bull divs goes, because of this wick, we're not going to see any bull divs here. We're seeing higher lows in the momentum waves, but because of this wick, we need lower lows in the price action. So we need this sucker to keep grinding down to that level of support, which would give us the bull divs. In other words, we need to make a low into that weekly level, into that daily level. Is BTC closing this leak below 178? Well, 178. I'm not sure what you're talking about with BTC there. $178. Are you talking about Solana maybe? If Solana's going to close it? XRP. Chainlink, guys. Chainlink is rejecting. Let's go to the 4-hour chart. Chainlink is falling down below our pitchfork midline, and we saw a failed auction breakout of the pitchfork midline. Naked weekly point of control. That's old. So we lost this range. We're breaking down below our pitchfork midline, and I think we're going to come down probably to backtest the macro value area high at 20.4. This macro value area high is of a large range that goes back, I believe, to November of 2023. Let's see here. Let me zoom out onto our daily chart. Coming back to, November of 2023. So we broke above, finally breaking above that value area high. We are seeing a failed auction of the pitchfork midline. So we highly likely expect the test to come down to backtest not only our previous highs, but the macro value area high. And then we want to bounce and we want to get back above. And if we get back above, we do have the SFP into our weekly level at 24.89. So we do need to be aware of that. An SFP of the highs into your weekly level at 24.89. But other than that, I think we're going to come down to test 20.4. Lose the value area high of the range, and we're going to see a much bigger drop down. Get rid of that guy. It potentially even dropping all the way to the POC of the range. And if we pull a fib from the lows of this impulse to the highs of this impulse. Okay, that golden pocket at 15.6 is very nice. 15.2 actually. Seeing a, well, first off, let me check this. 144% move, so we need to change this to log scale. Okay, yeah. No, that's your macro support. 14.2. You can see your macro log golden pocket, your point of control of your range. Weekly, the bottom of your pitchfork is going to be down there by the time you get down there. The next, before that, we have the bottom of the pitchfork band at about 15.9, which your anchored VWAP from the lows is going to be there. So a couple key levels, and that's also where your non-log golden pocket's going to be. If we pull a non-log golden pocket, SFP here, into your non-log golden pocket, into your anchored VWAP, into your pitchfork band in this general area. So we can map out this as support. And the big support we already have mapped out right down here. We could take this and we could pull this here. But seeing the rejection, seeing the drop down below your pitchfork midline, you can even see locally we back tested it bearishly, back tested the VWAP bearishly, and we're continuing to grind down here. So I would suspect that we are going to come take out these little range lows in here into your macro value area high. We can pull a volume profile of this price action breakout above the value area high. You can see your value area low is coming in here down below this SFP. So I'd be looking between like 20.6 to 20.7 to 20.4. That's your big support level. And this, if we want to really maintain bullish on Chainlink, this really does need to hold, guys. This needs to hold. Similar to Solana's 189 macro value area high breakout. And I am hopeful. The reason why I'm hopeful, guys, is because we front ran our resistance box just barely. This SFP here, we did not hit that weekly level. If we come in and we turn on our levels, weekly level at 24.89 was not hit. We turn on our monthly levels. We have a monthly at 25, was not hit. We turn on our naked daily points of control. Naked daily point of control was not hit. So we had a confluence of resistance up here that was front ran. Anytime you front ran a level like that, you can expect a bit of a range and then maybe a push up there to finally take that liquidity. Okay, now we'll go through some of the altcoins that you guys posted in the chat. Let me check the chat real quick here, guys. Welcome in. Can I explain the pitchfork? Well, a pitchfork, I explained it earlier in the chat, but a pitchfork is pretty much, you're measuring the trend. So if you're in a bullish trend, let me go to Bitcoin, for instance. On Bitcoin, if you're in a bullish trend, and I'm going to zoom out to the daily chart. So we are in a bullish trend, and you want to look at key swing points in that trend. So for this daily impulse or weekly impulse to the upside, you saw the big wave 3, the most powerful move to the upside was here in 2024. And so you can pull the pitchfork. You're trying to find the resistance targets in a trend and support targets. So you're looking from the lows, a key swing low to a key swing high to another key swing low. And that's generally going to give you your areas of macro resistance and macro support levels on that kind of grind within that pitchfork. So you can see here, once we found that area, once we found that key pitchfork, rejected the top of the pitchfork, fell down below, rejected the midline, fell to support, bounced from support, came up to the upper band, rejected, bounced from support, rejection. So it's just a trend-based moment indicator to find key levels in a trend, and they're based off Fibonacci levels. And yeah, our pink I am kind of famous for pitchforks. Pitchforks and channels, man. Those are my things. Coinbase has been front-running levels on this entire run from like $9. And Tiamat, you are right, dude. You are so right. And it could have front-run that's resistance, and then we could just drop. You know, it's a possibility. The key for Chainlink is 20.4. If we lose 20.4, we could see a much bigger drop come in play. I don't know if you guys notice all the thumbnails. Yeah, you know what, Mark Dutch, I was in there as well. I had an all-time high celebration thumbnail and looking for continuation to the upside. Now, this was a news-based catalyst dump here, and we're not saying that the bullish momentum is over with, but because we are breaking market structure, we have new data that's giving us, you can't keep the same bias if new data comes in that gives you the, uh, gives you, what am I trying to say? Gives you new information. And we did have a bearish break in market structure. And that's because we broke down below our prior lows. Yes, right now it's just a wick, right? It's just a wick down below. But breaking market structure bearishly, now you're still bullish overall because your bigger trend is bullish, but you need to at least start as a trader being concerned of a lower high coming in on the charts before continuing the downtrend. So not that we're not super bearish right now, but we're more cautious because the trend could be ending. Also, we did see the completion of a 5-wave impulse up. And so trend could be ending. We could be seeing a larger 3-wave correction down, creating that topping reversal head and shoulders pattern. Okay, let's keep going through some of the altcoins. Let me scroll up in the chat here. Oh, I see another super chat. Chainlink, thank you, Tiamat. I did do Chainlink. Let me know if you got the answers you were looking for in that TA. Charles, it's kind of like a channel. Channels are also measuring trends. And it does have fib levels within it. Yeah, but you can change it because in a channel, you're just taking 2 pivots from like, let me show you an example of that. Like, okay, wait. Let's zoom out to the daily time frame. In a channel, if we were measuring this move up, you would take the channel and you would take the channel from the low to the higher low, and then you'd bring it to that high. So you can see here that channel is nicely respected as well. It would be pretty much nicely respected as well. Reject from the midline, come down to the bottom. But in a pitchfork, it can give you different angles based off Fibonacci, different angles of the trend based off Fibonacci. And that's where that can really come in handy. For me, pitchforks are great. Okay, awesome, T-Man. Thank you. We did do AVAX just a minute ago, actually. AVAX is, AVAX is rejecting from the upper band of the pitchfork. Quite simply, AVAX is rejecting from the upper band of the pitchfork, rejecting from the value area high of the range, and I expect to move down to this daily level to grab liquidity here at, what is that, 2265 into your golden pocket. So you see a swing failure pattern into a golden pocket. If that doesn't work, I think we're coming down to that 192 to about 21.7. And if that doesn't work, we're coming down to 19. So if you want to look more in depth on that, just scroll back in the live stream. All right, we'll go into ICP. We'll go into near. Let's do ICP first. ICP USD. Oh, I also want to cover Ondo. ICP is rejecting. So guys, the thing on ICP, and I was really looking for this breakout to continue. You can see this is our small range that we were looking at. Rejected the value area high, saw a little bit of a failed auction above the value area high, took out your local internal highs, and now we're dumping back not only within the small range, but within the bigger range, which is more important. We're dumping back inside of our bigger range that goes back to March of 2025. This is an accumulation range here. So overall, ICP is looking very bullish, but this is a bottoming range, accumulation range. We did bounce. So now that this could be seen as a wave 1, wave 2 to your golden pocket area, because we're making another lower high here, if we break these lows, we could be looking at an internal wave 1 and an internal wave 2 before seeing your big explosion in a wave 3, where you start to see that expansion of the accumulation. So let's go ahead and pull. This is a clear 5-wave impulse that ended. 1, 2, 3, 4, 5. 5-wave impulse ended. So because that ended, we can expect a correction, and we're going to pull our Fibonacci from the golden pocket, from the lows to the highs. And that golden pocket, once again, guys, these golden pockets coming in, all of them are coming in at key liquidity grab levels. Anytime you see a swing failure pattern into a golden pocket, pay attention to that, because that could be a really good trade setup. If it confirms, you don't just blindly long there. If it confirms, you do that golden pocket and you look for a pierce of the level into your golden pocket support. Upon reclaiming the level, you long. So you don't long straight. I'd probably long upon reclaiming the 618, bouncing from that 618. Your stop is going to go below that low, and you're going to be targeting in this scenario, because you're breaking market structure bearishly, you have to look at a lower high as your TP1. So in that case, you would pull a Fibonacci from the highs to your lows. I'm just going to put them like right here, and you'd be targeting kind of that value area high, golden pocket area for your TP1 at least. 5-to-1 risk reward ratio there. Scalp long. Could be a lower high where you could continue bearish momentum to the downside. But ICP is just in a bigger range. Now that we attempted to break out of the value area high, you can see value area high rejected us, attempted to break out of it, fell right back in. Because we're falling right back in it, there is a potential in a bearish case scenario that we do drop all the way down to the point of control of the range. Now, if we're looking at our retracement, 786 is going to be down below that. Okay, man, if you come down to that 886, it's going to bounce. That's a level where you could bounce. And in ranges like this, in sideways ranges, the 886 oftentimes will give you some sort of bounce. But just be aware that if you come down here, you're going to be breaking market structure bearishly. You could bounce from there only to come up, make a lower high into your value area high, and then drop to your value area low. So it's not a good look that we're breaking back inside this volume profile. And let's pull that Fibonacci here. Let's go to our golden pocket. Okay, golden pocket's already been hit. So that golden pocket, it's still somewhat valid, but we've already bounced from it once. From this low to this high, we came down to golden pocket, bounce. In a very, very bullish scenario, guys, in a very bullish scenario, we could be in a multiple 1-2 impulse, like a triple 1-2, where you see a 1-2, 1-2, 1-2, and then you big third wave here, and then you get all your 4-5s, 4-5, 4-5, 4-5s. You get that ending diagonal structure, and then you break it down after that. So in that scenario, you do not really want to take out these lows. If you take out those lows, it invalidates that multiple 1-2. Let's pull our Fibonacci from here to here. And let's look at our 886. Okay, we haven't quite hit the 886 yet, but we're below our 786 already. Or yeah, below your 786. Not a good look. Honestly, for me, it kind of gives low probability to this being a multiple 1-2. More like a 5-wave impulse finished here. This was your impulse up in a 5-wave move, and now we're looking for that correction down to your golden pocket, which was right around that liquidity. Actually, for me, I like trading ICP now. I'm going to set an alert here. Oops, not that. I am not going to take that. Once again, guys, I am not taking the trade unless I see the confirmed swing failure pattern. You can see very nice bear divs, higher highs here, lower highs here, lower highs here. Money flow is now starting to top out and drain out. So these bear divs might play out, and we might get a rotation all the way back down to the value area low that we front ran here. We might come all the way down in SFP, our impulse lows, into the value area low. So that would be another area that I would be potentially interested in. And it looks like we had a box there. Is that our 786? Yeah, your 786 is down right below that value area low. Let's check our, oops, what am I doing? Let's check our naked weekly points of controls. Okay, very nice, guys. Very, very nice. So that is definitely going to be a nice support level. What am I doing here? This area right here is also a naked weekly point of control. Definitely going to be looking for long in this general area. The SFP into a naked weekly point of control into your golden pocket at 528 is going to be very, very nice. Very nice support level. At least I would expect some sort of bounce from this area. Now, it might bring us up to a lower high where we then reject from the value area high and continue dropping. But this should be at least a scalp long opportunity. . Once again, I'm not going to take it unless we confirm the swing failure pattern. Let's check our naked dailies real quick. We're at the naked daily right now. We're attempting to hold it as support. I do not know if it's going to hold. Let's zoom in here onto the 15-minute chart. Yeah, and I'm liking this. Is starting to look like some exhaustion here. So towards the end, you'll get this exhaustive channel that forms, and you'll chop down in this exhaustive channel until you actually hit your support level. So I would expect this chop in here to continue until we hit that support, and then see that push up from there. It looks bad. No bull divs. Money flow looks bad. Hidden bear div just printed. Yeah, more lower for ICP at least to 528 is highly likely. Highly likely. Once again, you lose that, you're probably coming down to your $5 point of control. Bear divs on the 2-hour, higher highs here, lower highs here. Money flow's been draining out of the asset, just crossing into the red. Bear divs here, money flow just crossing into the red. It does look like more downside for ICP. Let me see here. Guys, give me just a second. Okay. All right. Let's see. What else do we need near? And I'll check the chat in just a second here. Is Frankie in here? Frankie, could you not token, please? Yeah, not I'm not Frankie. It's Divine Hood, but Frankie is a great guy. You know, Frankie is one of the real guys out there that I think is a real trader, and he really does know what he's doing. He's a volume profile trader. He's pretty much uses only volume profiles, but he's got a very good system, and he's a very good human being. Like, he's one of the true human beings out there that cares about his community. He really, I love the guy. I have nothing bad to say about Frankie Candles at all. This was a setup I posted, I think yesterday or today in the Discord or in the Telegram chat. We've finished the 5-wave impulse. 1, 2, 3, 4, 5, and I don't think Frankie Candles uses Elliott waves either. But we did bear divs here, money flow draining out of the asset, about to cross over into the red. We can expect that this impulse is done and that we're going to drop at least to our golden pocket. You can see our golden pocket has some confluence with the point of control of our range. So I'm expecting a move down to that point of control of the range. We did front run the value area high, and we did front run grabbing the liquidity into the value area high. This is, once again, just like ICP, a bit of an accumulation range in here, guys. Accumulation in the making. So if once this range finishes, we can expect massive breakout in expansion here. Expansion up much higher. But the question is this range done developing, and are we about to see the breakout? Well, on higher time frames, it's suggesting that it's getting close. So because of that, we want to make sure that we're ready to catch some long positions. But making a lower high here was not a good sign. It's not a good sign at all. And this could be a flat correction, an A, B, and then a C to come down to your value area low. In a flat correction, coming to the 0.9 Fibonacci is a target for a flat correction. And let's just throw on that 886 real quick. Did we reject? Come on, there we go. 886 here. And yeah, we even broke above the 886. So we did probably hit the 0.9. Let's just come in here. Let's do this real quick. And let's go 0.9. And let's check that out. Yeah, rejecting from the 0.9 area. Very highly likely that this could be a flat, or it's a, yeah, flat correction. The only thing here is this is impulsive. And in a B wave, you don't like to see impulses. So, we had our 3-wave move down. If that's W, and then in an X wave, you want to see another 3-wave move up, and then potentially an impulse down for your Y wave, or another 3-wave move down for your Y wave. So it's a little bit confusing as far as the Elliott waves goes. Because we did make a lower high here, I'm hoping that this is going to be a wave 1, wave 2 to your golden pocket, and then you get your big explosion in a wave 3 here. And then as far as the bigger daily impulse goes, a wave 1, a wave 2, an internal wave 1, internal wave 2, and then your big explosion. So a double 1-2 impulse on higher time frames, and a within the bigger double 1-2, you're looking for a big 3-wave, third wave impulse within itself. Yes. Yeah, and Tiamat, we do have such a good community. You guys, I appreciate so much of you in here. You guys are really good supporters. Even the guy, Eyes Wise or whatever, the guy was in here earlier giving me some shit. You know what? Thank you for joining. If you don't agree with me, that's okay. I'm not going to hate on you because you don't agree with me, or you don't think I know what I'm talking about. That is fine. You have the right to your own opinion. I do my thing, whether you like it or not. And if you stay great. I appreciate the support. I love you guys. If it's not for you, there's plenty of other YouTubers out here. But I will just say this, like, you guys will see, I've been trading with Jason Casper in his Discord community for over 5 years. And I just started my own Telegram group here recently. But trading is about probabilities. No one is 100% right all the time. No one gets them right. You can have all the TA, all the confirmations lining up. Sometimes the market goes against you, especially when there's bearish news catalysts like we had today, this morning. And you just can't, you can't predict everything. So if someone wants you to be 100% right, then, I mean, they just don't understand trading, I guess. All right, let's see. Well, let's mark out that daily level that we have below us. We have this fresh daily coming in here. And let's zoom in to the 1-hour chart. Let's mark out and see if we have naked weekly points of control. Okay, none. And let's look at our naked dailies. Dang. Okay, so not the nicest confluence. For me, the nicest level of support is the SFP into your golden pocket and POC. That's the nicest level for me, is this guy here. But we could see some bounces from the daily, naked daily point of control area as well. Just a small bounce from that area. And let's first mark out that naked daily. And then we will come in here and do a Fibonacci pull from our last 1-hour lows to our 1-hour highs. Yeah, okay. It's going to be right around that 886. And so 886 at the naked daily. I don't like it so much because if we're probably going to drop further. Let's just say that. We do have the bear divs coming in. We're probably going to drop further, but this is setting up, you guys, all these setups of an SFP into a golden pocket. Those are great trade setups. And like, I'm interested in them, and I'm interested in the bullish momentum continuing. It's all going to depend on Bitcoin here, but we could get some great long setups coming in here in the next couple of days. Okay, that's it for near. Let's check the chat here. We covered a lot of altcoins today. I am going on 3 hours here, so I'm going to take off soon, but let me read the chat. Let me see what you guys have to say here real quickly, and then we will get going. I'll be live streaming tomorrow as well, 3 p.m. Eastern time. Sorry about the rain today, guys. I know that was pretty bad. I could barely think, seems like, Mark Dutch, you were here for the last one, man. Last time it was hailing and raining that bad. I actually got my power cut, and it was cut for like the entire half of the city or whatever. Okay, Sol at 189. Yep. Israel, we covered Sol earlier, and Sol, yeah, Sol's at that 189, and we gotta just have to see if it holds. We could bounce around here for a bit. Oh, let me go to this. Actually, it's even losing it a little bit. Let me check out our pitchfork here. This on Solana, guys, this channel is like the fib channel that's very similar to Bitcoin's channel for the entire bull market. It's based off of the lows of the bull market up to your first initial high here. And you can see we pretty much came up the 2-to-1. Then we lost it. We rejected multiple times from the 1.618. And then we're holding the midline of the channel, but we're kind of in this like contracting diagonal. And what is a little bit concerning for me about Solana, big move down, coming up to that kind of golden pocket area. Could we see another flush down here? And let's pull that fib from the highs to the lows. Let's turn on that golden pocket. You still haven't hit the golden pocket, but because that's more than a 30% move to the downside, you do need to come in here and change that to log scale if you're using the log chart. And you can see, where are we rejecting? Our golden pocket area. And this does look like a corrective type price action. In a bearish case scenario, you have your big flush down in let's say in this case a W, then you have your X, and then you could drop here in your Y all the way down. And so let's measure those targets. Let's do from the highs. And we'll turn on those targets. $73 in a very bearish case scenario. You could come down to 70 to $50. Now, I am not calling for that yet. We still have our range, and we still are actually even above the range, or maybe today closing below it, but we are still at that range, trying to break out of that range. Very bullish price action. If we can, and actually this on Bybit here, let's just make sure that this is right. Let me come in on the 1-day time frame. Yep. Okay. Right there. And actually on Bybit, the value area high is a bit lower. It's at 183. I like Coinbase levels better. But if you like Bybit, let's actually pull it on Binance. Let's see how it looks on Binance. Between 189 and 183 is really what we need to hold. And yeah, on Binance, it looks like it's about the same as Coinbase at 189, 190 even. So not a good sign, guys. Money flow still looks pretty bullish, though, on the daily time frame. The very concerning thing for Solana, we had a daily swing failure pattern with potential bear divs forming. The only thing that is keeping us bullish is that money flow. But these bear divs forming here, not looking good. And on NAMI, which NAMI is very good for this, money flow bear divs, higher highs, lower highs in the money flow as we're making higher highs in the price action. And that's where NAMI's money flow being quicker. When you see confirmed money flow bear divs on a high time frame on NAMI, and you see confirmed momentum bear divs on Market Cipher with the money flow bear divs on NAMI, that is one of the best setups that I've discovered in my few months of trading with these two indicators together. Very scary here. Very scary to see that. Yeah, so let's see. VeChain. We'll do VeChain real quick. Okay. Oh, CRV. CRV is definitely one that I want to look at. We talked about CRV. CRV is just in a range, this upper range. So here's the thing with CRV, guys. Let me hide this here real quick. CRV is breaking out of the macro value area high of our range. You can see this is the point of control, the value area low, value area high. We're breaking out of the macro value area high, but I did warn about this last week and earlier this week. Because we broke market structure bearishly on the daily time frame, breaking this market, breaking daily market structure bearishly, we were looking for a potential lower high to come up and form that head and shoulders or distribution, model 2 distribution, tap 1, tap 2, tap 3, model 2 distribution, where then you could distribute back inside your volume profile. And all of this here, I mean, there's nothing holding you up here. So you could drop quickly. If we lose this 86 to 87 cent area, 86.8 to 87 cents, it is going to be a very, very aggressive drop to the downside. It would be confirming this bearish topping reversal pattern, whether you call it a model 2 distribution or a head and shoulders pattern. It would be a very aggressive drop, guys. It could get really bad for CRV because of this move up, having no structure within this move up. So locally, let's check here locally, and let's zoom in on this range. Let me turn on that volume profile. And let's zoom in onto the 2-hour time frame and look at this range. We are flirting with losing the value area low of this range right now. This move up did look corrective, guys, and I was warning about this move up looking like a ascending channel correction with a bit of a deviation. Actually, we pulled to there, and then, you know, it looked pretty bad here where you have your big move down. Now, this could be a WXY correction, three-wave move down, complex move, three-wave, followed by a three-wave, followed by a three-wave here, and then you have your big move down here. So bottom line is we don't want to lose 87. Now, a little pierce below to grab the liquidity at 84 and an instant reclaim would be okay. But it's not looking too good right now on CRV. Like, I really am concerned about CRV breaking down here. And if we go onto our daily time frame, we do have some potential bear divs that were in the making. We did print a hidden bear div on this internal high here. Let's pull that fib from the highs to the lows. And yeah, we're rejecting our golden pocket. And that's the area where you would expect a rejection. Look at today's bearish engulfing candle. Big bearish engulfing candle on the daily. Not a good thing. That means this money flow is probably going to roll over tomorrow. We did have hidden bear divs print, but also confirmed bear divs here on the daily time frame on NAMI. Lower highs in the price action, higher highs in the momentum way. Higher highs in the price action, lower highs in the momentum waves. So bear divs confirmed on NAMI, a big bearish engulfing candle, rejecting from your lower high golden pocket after breaking market structure bearishly. All signs here are is that this thing could dump hard. I do not want it to. Trust me, I want to come up to 120, 121, but it really needs to hold 87 cents. Okay, that is CRV. I mean, CRV not looking good, guys. Not looking good. Money flow looks pretty bad here. Just crossing into the red on the hourly. Crossing into the red here. Let's go to the 2-hour. Yeah, looks pretty bad. Money flow crossing into the red on both of them. We might get a small bounce from this value area low or even coming down to take out this local liquidity. Let's see if we can take this local liquidity, then reclaim that value area low. This is bad here. The only thing that is a little bit of a saving grace is we did not SFP 106, this internal high. But this is your range, and we're losing the value area low of the range. If we lose 87 cents, I will be looking for a much larger short here. Much larger short. Okay, we'll do VeChain here. VeChain, what's VET? I don't think I've done VeChain for a long time. Let's see, is there a better chart for VeChain? There we go. Well, it looks like VeChain did reject from our box of resistance up here that we had the last time we marked it out. Resistance, top of the pitchfork band into your weekly. We rejected, and then we actually came down to our support level as well. Now, that box wasn't pulled all the way, but that was our support that we marked out way down here. So we rejected from our resistance. We bounced from our support on the weekly time frames, and we're just chopping around down here. Now, we have lost our pitchfork, our bullish pitchfork. You can see we rejected from the top, and now we're losing it after. Let's now zoom in. First off, let me mark out some of these levels. So this weekly has been tapped. This naked weekly has been tapped. This naked monthly has been chopped through. And this weekly has been tapped. Man, actually, Chainlink respects that macro TA pretty well. Not Chainlink, VeChain. But look at all these wicks. Like, this thing is such low liquidity, guys. I mean, I would definitely not be derivative trading, spot margin trading this thing. It looks like we have our big multi-month dump to the downside from the top of the pitchfork, multi-month dump to the downside, and we're starting to form a bottoming range in here. So this is like seller's exhaustion. So what we can look at is you can pull your volume profile and you can measure this bottom range. So we're back inside. We attempted to break out of the volume profile. We're back inside. We bounced from the value area low. We have not quite made it up to the value area high yet. We're trying to hold the point of control as support. So on the daily time frame, actually, let's go zoom in onto the 4-hour time frame. Oh God, this thing is just terrible. I don't know how anyone would trade this if you're trading this. So I should probably stick to the bigger levels, but you're bouncing from value area low and you have not quite made it up to value area high. The thing with this on the value area high, you do have an liquidity grab, an internal liquidity grab into that value area high at 0.27. So that could be a level 0.275, could be a good, nice liquidity grab still. You're flirting around with the point of control. If you lose that point of control, you're probably going to drop to the weekly, and that's probably where your golden pocket is. Let's pull that golden pocket. Okay, golden pocket's actually a little bit higher than that. Let's do our 786. You're hitting into your golden pocket right now. You're seeing a small bounce from that golden pocket. Internal liquidity in here, double lows. So nice bounce from that golden pocket, but I would be careful, guys, because we're down below the pitchfork again. So if you reject from like that 25 area, you're probably going to come down at least to this weekly and potentially even value area low again. Let's check. I'm going to have to zoom out to the daily time frame. This thing is ridiculous. Let's go to Coin. Is Coinbase any better? Oh, Coinbase is much better. All right. Looks like you're forming a bit of a triangle in here on the weekly time frame. And then we have that weekly up here where we can look at the value area high. Okay, fresh monthly down there. We won't mark that out yet. Let's go to the daily. Took out that daily, no reaction. We do have a daily right below that weekly. They're pretty much the same area. I mean, we can mark them out because that's going to be kind of confluence of support in that area. Daily, weekly level right there. And then let's check our naked monthly point of controls. Oh, yeah. The naked monthly point of control for this month. Now, this month is only, halfway over. Let's not actually mark that out quite yet. But there's probably a naked weekly down there as well. Very close. Okay, so looks like you have a couple areas just of confluence, right? We have a naked weekly point of control, a weekly and a daily down in this general area here. And then your resistance is going to be right up near the naked daily point of control, the weekly, and the value area high. Trade the range until it breaks. This is your range. You're in it. It looks somewhat like accumulation. Now, making a higher low here was not the best thing to see. Yeah, daily money flows crossed into the green here, but you're printing hidden bear divs on a higher low, on a lower high, excuse me. You also grabbed liquidity on the daily time frame, internal liquidity grab, and now you're dropping with a bearish engulfing candle. So what that tells me is that this could be a bigger correction, a 3-wave correction. You have your internal liquidity grab. and then we could see another 3-wave correction down and a bigger WXY in here before seeing push up. I know I needed glasses looking that. I get you, R Pink. That was crazy. Yeah, guys, if you guys got anything out of today's video, please like the video. Please subscribe to the channel. Once again, if you guys want to join the Telegram group, I do have a free Telegram group. In order to get into the Telegram group, though, you do need to register with BYDFI using my affiliate link. If you do that and deposit $100, you will get a 50% deposit bonus because you do need to deposit $100 in order to get into the Telegram group. It's your money to trade with. You get a 50% deposit bonus. You get 17% discount on trading fees, and you will get access to the Telegram group. Now, in order to get into the Telegram group, there's a link in the description of this video. Click on that link to join Telegram, join the group. Once you're in the group and once you've deposited your money, you can type in /verify and then your user ID, and it will automatically put you into that Telegram group. And you guys can see some of the market analysis and trade setups that I post on a daily basis on Bitcoin, on altcoins, and come along the trading journey with me. So if you're interested in that, links in the description. NAMI is the momentum and money flow indicator that I use for entry and exit confirmations on trades. They are a very, very nice indicator for me. They are running a 50% off special for a limited time. So if you're interested in purchasing NAMI, the link is in the description. There's a 50% off discount code, which is Divine50, and that link is in the description as well. And then lastly, we have MEXC and Bybit. Those are two other exchanges that I partnered with, both great reputable exchanges. And if you're interested in trading on those exchanges, the links are in the description below. But let's see here. Okay, let me go to, so for me, I'm not interested until it comes down to the naked weekly, 23 to 23.3 to like 23 cents. And then above us, I'm really not interested unless we get up to that weekly level, the value area high, the weekly, the naked daily point of control. Anything other than that is kind of chop that you're seeing. And if we pull a golden pocket from the big last daily lows to our highs, yeah, we already bounced from that golden pocket, which was near the value area low. So now let's pull another golden pocket from our last daily lows to the daily highs we just made. Okay, and that golden pocket's a little bit above us. I'd be looking at the 786. 786 is around this box. So that is your area of confluence. Other than that, guys, I am not interested in anything here. It does look like some nice bottoming formation here, a nice bottoming formation. Let's check the weekly chart here. Weekly chart. And the one problem we saw here, the one big glaring problem here is we made a higher low here. Because if we would have made a lower low, we would have had very nice bull divs here. And let's see here. So NAMI showing some bull divs, but I think that's because the candle close was lower there. But look at money flow on NAMI's coming out now. And even though money flow is coming up on Market Cypher B on the weekly, the fact that we didn't create any bull divs at least tells me that we can chop around in this little guy for a little bit longer. See a little bit more of a bottoming formation form here. You know, start squeezing that triangle a little bit before we see either a breakup or a breakdown to grab liquidity and then a breakup. Okay, guys, I am pretty much done for today's stream. We're losing the value or the point of control of our range on Bitcoin. We were expecting that drop to come in for a little bit further at least. I want to come down to that 116.5 to 116.3 or 2. Yeah, it looks like all the coins are going to keep correcting a little bit longer. Ethereum did backtest that pitchfork resistance after falling back within it, and we're dropping. I actually posted that short setup in the Telegram group. Looks like we are getting that scalp short. Solana's really trying to hold the value area high. I hope Solana, for Solana's sake, I hope it holds above the value, closes the daily candle above that. Man, just some bad, oh, we're coming into our long setup here on Sui. Let's check here on the 15-minute. Do we see some bull divs coming into here? No, not anymore. No bull divs locally. Actually, not even locally on us Nami here. Yeah, we could see a bounce from here, guys, but it doesn't like look very good right now. What I would want to be seeing is on the 5-minute chart. Yeah, no bull divs even really on the 5-minute chart here. I mean, this just does not look good. Just does not look good here. I would expect this to come down to grab the lows if I can get them. At 360. You might hold that value area high, value area low. It's at the value area low. It's at the golden pocket. Not really seeing confirmations to enter long right now. If something changes, I will still look for the long. But all our bull divs have been invalidated now, and our money flow is coming out still on all time frames, on most time frames. Let's see. CME is going to open in 10 minutes. Hopefully that fill that gap completely and dump into the 618 with those divs. Yeah, crypto Shaw 256. That would be really, really nice. And you're right. Our CME gap is going to fill very, very soon here. Let's go to our CME chart. Let's go to our 4-hour, and that fill. I mean, we're pretty much there. It's a bit higher than that golden pocket. Actually, wait a second here. On the CME, it's at the golden pocket, so 117,300. That would be really nice to fill that CME gap into that golden pocket and push back up. Wow, it looks like the CME chart came all the way up to 125. 125 1-ish. Money flow looks pretty good on the 4-hour. Let me check Coinbase here. Not near as good. Let's check Bybit. Yeah, it's just I want a little bit lower, guys. Okay, thank you so much. Mark Dutch, looks like you got some good mayo in the making. Love it, man. I love it so much. I love homemade mayo, even though I've only tried it like twice. I make my own mayonnaise, but when I shared that on Tinder, my account got suspended. Oh my gosh. Oh. You know, I think Mark is the funniest mod there is too, out of everybody. Romantic candlelight dinner with air fryer. Uh, all right, guys. Thank you so much. Appreciate all the support. Please hit the like button on your way out if you got anything out of this video. I will be streaming tomorrow, so I will see you guys tomorrow. Wade, Ada, I forgot Ada. I'll do Ada real quick here. Okay, Ada, we're rejecting from our resistance box. You can see we had our daily and our value area high resistance. So we're rejecting from that box of resistance at the top of the range, at the value area high of our much bigger range that goes back to November of 2024. Now, let's delete this. Let's delete this. Now, we have our smaller range in here that we broke out of. The value area high of that range is going to be coming in around 83.8 or 83.9. So you're going to want to hold above that value area high. But if we take a Fibonacci from our last daily low, big lows to highs, the golden pocket coming in is going to be right around the POC of that range. And that is a support level that I would be interested in. But the big support level down below us is going to be this. It's the point of control of our macro range, the value area low of our smaller range, and a fresh daily level down there. So 72.5, 72.5, 72.6. That's going to be a real, actually, I'm going to set an alert there because I might look for a long there. But other than that, I mean, we're dropping. We have a pretty bad bearish engulfing candle for the day. Actually, not really. Wow. Okay. ADA's holding up a lot better than a lot of the coins out there. Money flow looks very bullish on ADA on the daily time frame. I would actually be expecting a. Let's zoom in here. This is interesting on ADA. Let's pull a Fibonacci because the way the ADA looks here, this looks like a third wave. So we could be looking at this as a 1, 2, 1, 2, your big third wave. So we want to see a 4, 5, 4, 5 come in here. So let's pull our Fibonacci from the lows of 3 to the highs of 3. And you want to look between that 0.5. Okay, let's see if our golden pocket's been hit yet. If you hit this golden pocket, it's going to invalidate the impulse. So if you hit 86.27, it invalidates that as a double 1-2 impulse. But we are there is still a potential that this thing is going to hold and we're going to continue higher. But I would have liked to see that 0.5 hold, and it's not really holding. And because of that, I probably expect us to move down at least to the point of or the value area high of our previous range, our small range that we're seeing right here, at least to back test the breakout of this range. And then, of course, that POC golden pocket at 81, 80, 82 really to 80 cents. But it doesn't look the worst here. Money flow looks so bullish on the daily time frame that I would like to see a higher low support come in and then like long the crap out of that thing. Okay, guys, thank you so much for your time. I will see you guys